Good morning, everybody. Welcome back to another episode of the Market Open. We are live. It is Monday, July 20th. We are starting off this week on a Monday morning. It's big tech earnings week, so it's going to be a big one as we have a lot of companies that are reporting this week. Last week we had ASML and Netflix, which were important. This week we've got Tesla and Google. On Wednesday, we also have ServiceNow, IBM, Intel, SAP. So you got a lot of companies. The week after this week, we will have Amazon, Microsoft, Meta, Apple, Robinhood, all of those big names. So definitely a big 2 weeks that are coming up in terms of volatility for the stock market. Last week was one of those weeks that was, well, not the most fun of experiences, especially if you are investing in semiconductor stocks. And in the pre-market, we are seeing a variety of different tailwinds in regards to new deals that have been announced today. Iran got some deals. Hut 8 Mining got some deal. And a few other data center companies got some deals. And so the proliferation of those data center deals, at least to an extent, is somewhat helping with the sentiment that has been kind of hit over the past 2 weeks. Last week was the worst, with many of these stocks falling pretty aggressively from their highs. On top of that, you have some updates from what we've been talking about over the past 2 weeks in China. The big headline last week was Kimi K3 building a model that's almost as good as Claude Opus 4.8 and Claude Fable 5 for about 1/100th of the cost. And so that is kind of what caused the downturn that we saw last week in terms of all these names taking a big hit. Micron right here, as you can see, getting a little bit of a bounce, up about 3.8%. Nebius, which went all the way to 160 last week, now at 186. That's up 5%. Robinhood's up 2%. DRAM's up 2.6%. Iran, again, off that deal they got, which we'll talk more about, that's up 8.86%. Hut 8 Mining got a 15-year lease on a deal. That's up 13%. So you're seeing a lot of those AI infrastructure names get a little bit of a bounce based on some of the updates that came out over the weekend from Kimi K3, which we will spend some time getting into. But it's nice to see, given, last week we had a lot of these moving averages that were completely violated, and lots of these levels of support that seem to be completely getting taken out. And so this week it's going to be a question of if we can rise above it. It's also going to be a question of what the hyperscalers say, and if the CapEx story, which is leading to these semiconductor names being the CapEx beneficiaries, continues to benefit. And Google is going to play a big role in that on Wednesday. Micron right there, 883, that is up 4.3%. AMD, that one fell to 460 that last week. That's at 514, back above 500. And you've got NVIDIA, which fell below 200 last week, back at 206. That is up 1.6% as well. You had AMC earnings today. You had Domino earnings. We will talk about all of those different earnings that we had. Obviously, we'll talk about the Iran updates, because that is also something that is accelerated over the weekend in terms of escalations, but it's also de-escalated as of pre-market commentary from both sides. And so, we will discuss the level of commentary that is kind of leading to the Iran situation somewhat not coming under control, but maybe the hope is that it will come under control. Oil actually hit 85 last night. It's at 82.50 right now. So we lost the gains that we had from last night because of some of those comments that offset the more aggressive comments from a couple of days ago. The United States continued to attack over the weekend, and we'll talk about kind of how that played out. But you do have crude at least coming down a little bit, which is what I think is helping the S&P 500, as that's up about 0.45% in the pre-market. All right, so let's get into it. Good morning, good morning, good morning. Thank you, everybody, for being here. June, Tess, Donvin, Scott Cross, Teddy Grams, Daniel, Stock Dylan, Tom, Eric, Cortland, Kentaro, Chels, Robert, Tracy. She says, I'm excited for big tech earnings. Tracy, I'm excited as well. It's going to be a lot to get into. It's going to be this. This is some of the most fun parts of doing the show, is when you have tech earnings, and thankfully we get to have it 4 times a year. And so, every 45 days we get into this cycle, and there's just so much to analyze as we get into this cycle. Evan, what's up? Django, Cortland, Channing, thank you for being here. Hood and Tier says, say my name. I think that is a combination of Hood and Palantir. Hood and Tier. Thank you. Thank you for being here. Greatest Vids, Dark Slayer, Tommy, Felipe. What's up, Felipe? Felipe was at the Singapore meetup. Appreciate you, Felipe. Thank you for being here. Also, speaking of Singapore, I put out an update on my grab thesis over the weekend on X. So anyone who's interested in my thoughts, updated ideas around valuation, stock price movement, all that stuff, that's on X, so you can read, as that was posted over the weekend. The first trillionaire, what is up? Charles, Vi, Gene, Larry, Golden. Thank you all for being here. Over the weekend, I did watch The Odyssey. I think it was a rite of passage for myself as a Christopher Nolan fanboy. Quick thoughts. Look, I thought it was a great movie. I probably wouldn't watch it again for a couple of years. It wasn't one of those movies where like, man, I got to watch it again next month just to relive the experience. It was a great movie, kept me entertained, sat there for the full 3 hours, didn't fall asleep. The best thing is I went on Sunday and the World Cup was on Sunday, which, I mean, I saw the highlights of the World Cup. I didn't really sit there and watch it because I was watching The Odyssey at the time, which means the theater was empty. So I kind of think I picked the best day to go to the movie theaters because no one was there. Look, I mean, Spain obviously was the better team. They played better. I kind of wanted Messi to win to see him, get 2 World Cups, but congrats to Spain. They deserved it. I think they were the better team. They obviously played better than Argentina throughout the whole game. So congrats to Spain. But yeah, I thought The Odyssey was good. I thought it was really good. It's still not better than Interstellar or Inception for me or The Dark Knight. I think those are the top 3 for Nolan, but it was a good movie. I think it was way better than Oppenheimer. And I enjoyed it. I do think everybody should see it. If you have, and I studied about the Odyssey and Greek mythology when I was in middle school because we were forced to take Latin. I know a lot of kids have to take Spanish or French or whatever. We actually took Latin, and so I had a teacher, shout out to Mrs. Geronda, who taught us all about Greek mythology. So I recognized all the stories, and the star-studded cast, seeing it on the big screen, I thought it was a good movie. I just don't think it's Inception, Interstellar type of quality in terms of originality, but overall, I thought it was a great film, and I did enjoy the movie. All right, so let's get into it. Let's start off with Iran updates, and then we'll get into oil and also what's going on with a lot of the AI build out capex concerns that we had last week, which obviously created a lot of volatility in the semiconductor stocks. So what happened over the weekend? The U.S. announced that 2 service members were killed and several others were wounded in an Iranian attack on a U.S. airbase in Jordan. So 2 U.S. soldiers unfortunately lost their lives over the weekend based on this attack from a U.S. airbase in Jordan, which results in the loss of their lives. According to U.S. officials, the base has been used by American warplanes to conduct operations against Iran. As soon as this news came out, Trump called the deaths of these 2 U.S. service members in an Iranian attack very sad. He also reiterated that the U.S. will never allow Iran to develop nuclear weapons, and he reportedly ordered U.S. CENTCOM, which started their 9th straight day of attacks yesterday night, to, quote, open the gates of hell on Iran following the death of those U.S. service members. A separate U.S. official told CBS News that tonight's strikes, which was yesterday, are expected to be significantly larger and more extensive than previous operations. That is what really spiked up oil over the weekend and got it to 85. The reason it calmed down and now we're at 82.50 is because this morning we got a report from Reuters saying that mediators, particularly Qatari mediators and Pakistani mediators, have proposed a 10-day cessation of strikes to find ways to revive the Iran-U.S. interim deal. So you've got this headline, which no one has confirmed this headline. We don't know if this headline is accurate. The Iranians haven't come out. The U.S. hasn't come out and confirmed it. But you do have this headline that is making the rounds of essentially, potentially convincing the market that the pre-July 9th strikes that restarted the end of the ceasefire might be coming to an end. Now, one of the Iranian foreign ministry or parliament representatives said, Americans keep bringing new military equipment to the region and claim they're stopping after the war. They bet on our intelligence being as brief as their own IQ. We've reached the stage of mastery in recognizing these American games, and on that basis, we prepared ourselves. Actions must confirm claims, not contradict them. And this is the other big problem that we've had, over the past 2 weeks. Every time the Americans say they want to negotiate or the Americans say they're not going to strike, the Americans go back to striking. Part of the reason for that is because the Americans are claiming that the Iranians, every time they want to negotiate, violate all the tenets of what the framework for the negotiation could look like. So I don't know if this new headline today in the pre-markets, which is calming down oil, is enough to get the market to be like both sides actually want to talk and sit down and stop what's going on, or it's just another headline in the midst of in a series of headlines that have happened over the past couple of weeks that haven't really resulted in anything serious. But nonetheless, it's giving us a little bit of relief on oil, which is obviously helping stocks. But, I don't know if it's the final step of this process to at least get to some resemblance of peace. Here's what Trump said yesterday on the attacks on Iran.
Well, we feel very badly, but, those great people, those great patriots were out there fighting that.
Okay, this clip lost audio. I don't know why it lost audio. Let me try again. Oh, I know why. Hold on. All right.
Well, we feel very badly, but those not have a nuclear weapon. Iran has been very, very badly damaged. They've lost everything almost militarily. They've got very little left. They've got some missiles. They've got some drones. They've got some manufacturing ability, not much. We control the Strait. They don't control anything. So we'll see what happens. But we hit them very hard again tonight. And we did that in honor of the probably three. It's probably three as opposed to two. Great patriots. Well, we feel very badly, but
And then this is what Rubio said yesterday as well.
I mean, Iran's economy is a shambles. They're 300% inflation, particularly on life-sustaining goods. They have dwindling revenues to meet even their own payroll. They have food shortages. They have a drought, as even caused. But they have a gasoline shortage and a fuel shortage. All these problems existed before all this began. They've just gotten worse. They will continue to get worse.
Audio is a little hard to hear on both of these clips, but essentially Rubio said Iran is a rich country. One of the reasons why Iran is in shambles is because every penny that this regime ever gets, be it through sanctions relief or through the oil they're able to get out, they invest in Hezbollah, they invested in Hamas. They should be spending billions of dollars building their country, but instead they use it to sponsor terrorism. So, the comments that Trump made yesterday that we just heard about, attacking Iran and hitting them hard, and then the comments that Rubio made, it's not anything that you would think would lead to a de-escalation of everything that's been happening over the past, 2 weeks, even though the update this morning, again, is that mediators have finally stepped in and they're trying to get some resemblance of peace from what is happening in Iran. Then you have the Ministry of Interior in Bahrain that just put out this tweet like 5 minutes ago. The alarm siren has been activated. We urge citizens and residents to remain calm, head to the nearest safe location and follow updates through official channels. We don't have an update yet on if a strike from Iran has happened, but last week, Kuwait and Bahrain, unfortunately, were the targets, along with the airbase in Jordan, of strikes from Iran. And so it's nice to see oil come down based on the headline, but then you have to question, is the headline even real at this point? And if the headline's not real, then we're going to go back to the same fighting that we've had over the past couple of weeks. And obviously the market did not like that. I mean, we were hitting oil at 67. We're up 18% from those levels back on July 3rd. And, that's not really what I think the market wants to see. Now, the market has a whole host of different issues that it has to deal with in regards to this AI semiconductor trade that we'll talk about. But from an Iran perspective, oil coming down would definitely help a lot of these high beta stocks that have been getting hit, because it's not good for any of the high beta nature of these stocks if oil tends to spike up. So that is what we have going on with Iran. You got a little bit of a decline on oil from last night. Unfortunately, not any major updates in terms of peace or a ceasefire being mediated in any meaningful way, but there are some headlines of that having the potential to happen this week. And if it does, hopefully in time for big tech earnings, maybe we'll start to see a little bit more of resemblance in the oil markets to not be that upset. You also had the Houthis announce a maritime embargo against Saudi Arabia, which effectively is banning Saudi Arabia maritime traffic through the Bab al-Mandab Strait. That actually came out an hour ago, that piece of news. So, I mean, I think it's going to get weirder before it gets normal in terms of some level of a resolution, especially when Trump said last week, the MOU is basically over and the ceasefire is done. And so time will tell this week in terms of how this ends up playing out. Okay, semiconductor trade, AI, what's going on? So, quick summary of what happened last week. Friday was one of the weirdest days ever for the AI trade. Meta, for example, went from 680 to 620 back to 650. Why? Well, it fell down because they hired an AWS representative or executive for the past 19 years to help build their cloud compute business. So the market was like, okay, Meta's doubling down on compute, so we should sell off Meta because their free cash flow is going to go down. I know everyone has seen this chart, but this is the free cash flow expectations over the next 12 months. If you're doubling down on this compute business, you have to spend on CapEx. Therefore, your stock should go down because your money is going to be going to other companies and we should take their stocks up. Ironically, those other companies, the CapEx beneficiaries, the semiconductor names, they didn't go up on Friday. They continued to go down. They had a little bit of a bounce during the middle of the day, but then they ended up falling towards the end of the day. And Meta continued to plummet until a deal was announced or reported. It's not fully announced yet, but it was reported by the New York Times, which is kind of old news because Semi-Analysis reported this a couple of weeks ago, that Meta is in talks to rent computing capacity to Anthropic in a deal worth up to $10 billion. So you had a lot of weird headlines go back and forth. Obviously, the major headline was Kimi K3 coming out with a model that is theoretically as good as Claude Fable 5 for a significantly cheaper cost. And as a result of that, the market basically said, okay, this CapEx trade is over because or at least that was the perception of what the market said, because these big tech companies don't have to spend as much on CapEx if these Chinese open source models can functionally do the same thing without spending as much. Why is AMD up 5% as I'm trying to get into my analysis of the weekend's event for semiconductors? AMD up 5.4. Microsoft deployed next-gen AMD Instinct and AMD processors. Okay. I would imagine that's good for AMD. You know, there was a rumored Anthropic partnership with AMD as well over the weekend. I actually thought that might have been the headline because there were a few credible sources claiming that AMD will be working with Anthropic very soon. Looks like it's Microsoft. Looks like, is Microsoft down on this? It'll be hilarious if Microsoft's down on this. Yeah, of course. Why not, baby? The CapEx spenders go down. The CapEx beneficiaries go up. Feels like May of 2026. Take me back 2 months. AMD, 5% up. Microsoft right there, down 1%. I'm assuming this implies Microsoft's going to be spending a ton of money on AMD chips, which is obviously why AMD is getting the bid right here. Microsoft expands their AMD partnership, will deploy Helios rack scale systems on Azure for frontier AI inference. The platform combines AMD's MI455X GPUs, Venice CPUs, Pensando networking, and ROCm software with shipments to Microsoft beginning in the second half of 2026. That's actually now. That's really soon. Azure will also add new AMD-powered virtual machines for agentic AI, data pipelines, and semiconductor design, marking a broader adoption of AMD's full AI infrastructure stack. This is an amazing headline for freaking AMD right there. Couple things on the top of my head. Number one, once again validating that big tech is ready to spend. I mean, if the fear from Kimi K3 last week was that big tech is not ready to spend, Google earnings, I think, will validate that they will continue to spend. Half of Google's RPO is expected to be revenue over the next year. Google's RPO is $468 billion. So you're talking about $230 billion from that cloud backlog is expected to convert into revenue, which is operating at a 63% margin. If Microsoft says anything like that, I know they're getting punished for a variety of reasons, but maybe that could re-rate the stock. But if anything, right now, what they're saying is they're willing to spend. And one of the companies they're willing to spend on is one of the most important companies in this semiconductor trade, which is obviously AMD. It's been a while since AMD got a nice big deal like this. I think it's been a month and a half since we heard a big name collaborate with AMD. Nebius should be getting a boost off this as well. Yep, look at that. Nebius 189. That is also green. This was my only dip buy last week. Nebius at 178. I did not buy the dip on anything except Nebius last week. So that was the one dip buy. But again, if you bought Iran, if you bought CoreWeave, if you bought Corning, if you bought all of these names, they're all up in the pre-market. The goal this week is going to be to see if the CapEx expectations by big tech is enough to allow a meaningful bounce and to repair some of the charts, because the Nebius chart is broken. The AMD chart got hit pretty badly. The NVIDIA chart has been a mess all week. So we're going to really need to Taiwan Semi after a record earnings, could barely get above 400. So we're going to really need to see some of that momentum come back. All these energy derivatives, Oklo, T1 Energy, which are ultimately data center proxies, those got hit last week. Bloom was down 30%. So if you bought the dip on anything last week, at least today pre-market, you're probably up. The question is going to be, can we get more of these types of deals like a Microsoft and AMD? But man, did we need a nice deal like this to keep the CapEx trade, at least sentiment-wise, getting healthy. And we're seeing that right now. Nebius 189.25 Microsoft. So let me just say the Kimi K3 thing real quick, and then we'll get back into some of these headlines. This coincides with essentially why Microsoft is buying more from AMD. So what did Kimi K3 come out over the weekend and say? Well, Kimi K3 has received far more love than we expected, and our GPUs are feeling it. Over the past 48 hours, demand has pushed close to the limits of our current capacity. To protect the experience of existing subscribers, we're temporarily pausing new subscriptions and prioritizing compute for current members. Existing subscribed users are not affected. We're adding capacity as fast as we can, and we'll reopen new subscription spots in batches. Essentially, what they said is we are compute constrained. So you've got two, narratives that are going back and forth right here. Number one is the narrative that Chinese models can distill American models for 1/1000th of the cost and be able to produce quality of models, which, saying this is only distillation is not doing it justice, because, there's a very hardworking team at Moonshot that came out with a Kimi K3 model. Alibaba, by the way, came out with a new model today as well. They said it's just below quality of Fable 5. I think it's called Quen 3. And so you can't just say it's distillation. It's a lot more than, it's actual innovation that these Chinese companies are doing. But because it costs so much less than the American companies, the market's saying we don't need to spend that much on CapEx. But then you have Kimi K3 come out and say, wait a second, we don't have enough compute. If we had enough electric infrastructure, if we had obviously enough GPUs, if we had enough networking, if we had enough of all the different things that are required in the semiconductor stack that allow, the market to operate in a functional way that, provides distributed compute to everybody in a way that can satisfy the demand, which we haven't been able to for the past 2 years at this point, then we would be selling more subscriptions. We would be working with more enterprises. But the problem is we can't do that. And by the way, the shift from consumer products like ChatGPT and Claude Fable 5 for like people like you and me onto Kimi over the weekend is what really caused all of that happening. So it's not like an enterprise over the weekend was like, we're going to switch from Claude Fable 5 to Kimi K3. Like that can't happen in 2 days. So the fact that their GPUs are already, hitting max capacity is because of people like you and me, consumers that are deciding that we want to use this Chinese open source model or host it ourselves and start playing around with it. So it's got compute constrained over not even enterprises meaningfully adopting it because it only came out 2 days ago. So what happens if the enterprises are like, this shit's really cheap, we want to use some Kimi K3? I mean, they're going to need to spend a lot more on compute. And as a result of spending a lot more on compute, that is why I think the AI trade is getting a bit of a boost right here in the pre-market, because the model that everyone thought was supposed to kill the AI trade just said we need a lot more AI. And I think that's why we're getting some love. Google, do we have a headline on the Googs? Google is up about 1.2%, 346 to 351. The information reporting on Google. Google is planning a new chip to run AI models more efficiently. Google plans to deploy, these are called frozen V2 chips, as soon as 2028. Frozen V2 chips. Is this another way to say is a new generation of a TPU, or is this a totally different chip? But there you go. We don't have that many updates on Google, AMD, and Microsoft yet, because these headlines just came out. But 2 pretty important companies, or 3 of them, Google, Microsoft, AMD, in the context of this broader AI trade, announcing collaborations and deals together. I wonder if this is a new TPU, or if this is, it has to be some version of a TPU, right? But the information is calling it a new chip, so maybe they're going to frame it differently than the TPU in and of itself. But the fact that, look, if Google is just from the headline alone, if Google is planning to build a new chip, just like Microsoft and Meta are actually planning to build their own versions of chips as well, they're going to need to suspend on a lot of compute, right? If Microsoft's buying from AMD, they are spending on more compute. AMD is going to have to buy from all their suppliers to be able to fill the demand for Microsoft, and all those suppliers, a lot of them are public companies, server racks, wafers, etc. AMD is going to give them demand. A lot of that's coming from Microsoft. That's why Microsoft stock is down right now. If Google's building their own chips, they're going to have to go to Broadcom and Marvell and all these suppliers to help build those chips as well, which is obviously good for those earnings. So 2 headlines this morning, along with Kimi K3 basically saying that they are compute constrained. Again, mainly from consumer adoption, because I doubt any enterprise switched over the past 2 days to, immediately start adopting Kimi K3. And as a result of that, the compute constraint narrative continues. So who is all of this bad for? Once again, it's bad for Anthropic and OpenAI. And that has been the prevailing comment that has been pretty obvious, that most people have come to the conclusion to. Why is it bad for Anthropic and OpenAI? Well, take a look at what Anthropic did over the weekend. Beginning July 20th, Claude Fable 5 will be included in all Max and Team Premium plans at 50% of limits. Pro and Team standard users will continue to have access to Fable. Demand for Fable has been challenging to predict, which is why we rolled it out to subscription plans in stages, extending access several times as we secured additional capacity. I think that it's not just about having a challenging time to predict demand. I think Claude, after the announcement of Kimi K3, was like, this model is actually pretty good, and it's a lot cheaper than what we're offering, so we need to probably take some prices and limits off of our models so that people who are using it don't get mad and go to Kimi K3. Once again, creating a conventional, something we've seen in business so many times in so many industries, race to the bottom. And so as a result of that, that is why I think a lot of the data center names are getting a level of boost right here. But it's also one of those things that makes you question what's happening with Anthropic and OpenAI at scale if these Chinese models just continue to get a lot more attention. David Sachs over the weekend is starting to get a lot more concerned about the Chinese models. And here's what he had to say. By the way, this is a deleted tweet from one of the Kimi K3 employees, but listen to what they said based on quote tweeting that Claude tweet that I just read to you guys. Quote, after we leave, they will build schools and hospitals for you and raise your wages. But this is absolutely not because they've had a change of heart, nor because they've turned into good people. It's because we came. That's kind of crazy. There's one of the Kimi employees saying, look, the only reason Anthropic is giving you guys more access to data and compute and models and usage is because of us. It's not because they want to do it. Which, they're kind of right about that. Like, if there was no Kimi K3 over the weekend, I don't know if, Fable 5 access would have been expanded in the way that it is. With all that news, by the way, Kospi was still down 5% yesterday, which is kind of annoying because all of those updates that we talked about for the past 10 minutes are super bullish for memory. And we'll talk more about Micron in a second. So I'm not sure why Kospi ended up falling 4%. Maybe it was falling Friday's action. But if Micron, SanDisk, Western Digital have a good day, SK Hynix, et cetera, maybe we'll see that rebound going into tonight. Okay, so that is what we had with Kimi K3. Now, here is what Mr. David Sachs said. Obviously, the Chinese models getting this much attention is a little concerning for what's happening in America. Someone right here over the weekend said, I have a report of full security issues of a software that I'm working on. Codex won't fix them because of cyber guardrails. Fable won't fix them because of cyber guardrails. Kimi K3 fixed them all, no restrictions, just got the job done. This will end badly for OpenAI and Anthropic. David Sachs says, Kimi K3 just fixed 15 critical security bugs that Codex and Fable refused because of cyber guardrails, which are what people call the woke parts of the model. Other people say it's the security that is needed to keep the models healthy. Nonetheless, Kimi K3 doesn't have any of that stuff. There's no reason to limit American models on tasks that Chinese models handle without issue. We're only making ourselves less competitive. So you have New York having a moratorium on data centers. China's not having a moratorium, so they have more access to potentially build out more compute. And then you have the closed models in the United States censoring themselves on certain issues around cyber security, particularly around the critical security bugs, which I don't know if that's good. I don't know if that's bad. Competitively, that's obviously bad if a competitor is able to do them. But internally, that might be good because maybe if they gave that access, that would not be a good thing for cybersecurity writ large. But the point is, these Chinese models are creating more avenues from a cost perspective and from a use case perspective that are starting to challenge the American models, which once again is not bad for the data center business. It's not bad for semiconductors. It's not bad for AI infrastructure as a whole. It might be bad for Anthropic and OpenAI, which could have some effects on the AI infrastructure trade, even though I don't think it destroys the AI infrastructure trade, but it could have some effects. And this chart right here showing you that Chinese AI models are winning over American companies. Weekly token share of Chinese models used by US firms on OpenRouter has now hit almost 60%. It was less than 10% back in January. You're just seeing the shift from some of the closed models into the open source models from China. And that's bullish AI infrastructure because it means a lot more demand, especially as costs go down, right? The whole concept of Jevons paradox, more and more people are using the compute generating tokens, but it might not be the best for OpenAI and Anthropic. And I think that's what the market is struggling to fully understand. But it's bullish AI. And I think that is the broader conclusion, which is why the pre-market is showing these semi-stocks some more love. Having said that, market sentiment can shift really quickly. And we need to see these stocks hold above their moving averages in order to imagine that the DeepSeek 2.0 thesis on Kimi K3 might not actually be as bad as what some people think. Last thing before we talk about the IREN deal. So the Databricks CEO said, we host open source models such as Kimi and offer them to our customers. Demand has been so strong that we are running out of GPUs across multiple regions. We nearly exhausted our GPU capacity in Asia, and demand is rising in countries including Japan, South Korea, the United States, and India. We therefore need to acquire a large number of additional GPUs, which requires significant funding, which is why they raised $3 billion in a Series M funding on Friday. That demand was what triggered our latest fundraising round. We were inundated with customer requests and needed more GPU capacity. GPUs are extremely expensive to acquire. really bullish AMD, really bullish NVIDIA, really bullish all the picks and shovels plays that are part of helping build the nuts and bolts for all the GPUs, which are, so many of the companies that have done so well this year. But a lot of this demand from the Databricks CEO is coming from these open source models, which means theoretically really bearish Anthropic and OpenAI. So the market, I think right now is struggling with, do the foundation models deserve a premium? If those stocks were public, would they actually be trading at $1 trillion market caps? And do we still buy the semiconductor names because all the open source models are still creating all this demand for the semiconductor names? And can we avoid a catastrophic collapse of a lot of parts of the trade? Because if Anthropic and OpenAI don't really get, the types of margins that they were expected to get, can they fulfill their spending obligations? Are those spending obligations even that important for Anthropic and OpenAI to commit to? Can other people shift that spend away? So even if OpenAI can't pay their bills, Oracle can take their compute capacity and give it to someone else instead of the 50% of RPO that is OpenAI right now. I think those are the bigger questions that the market is struggling with. And, we don't have answers to those questions, but those questions are important. And as we do get answers to those questions, I think the broader semi-trade could very well be intact. It's just the questioning of those narratives is, causing, I think, the volatility that we've been seeing over the past couple of weeks. IREN. So speaking of more data center companies getting more deals, IREN signed a $2.8 billion deal in new customer contracts with leading AI developers. We don't know the name of the companies that they signed a deal with. The quote is just leading AI developers, but they are raising their 2026 ARR target to over $4 billion. IREN's customer base now includes Microsoft, NVIDIA, Perplexity, Figure AI, Together AI, FluidStack, Fireworks AI, FAL AI, Hume AI, and then these new leading AI developers. I don't think it's a hyperscaler because $2.8 billion seems relatively small. They also mentioned customer contracts. And so, there's probably multiple contracts that are smaller within a variety of different companies, potentially startups. But if they're leading AI developers and they're paying IREN, obviously that's important. But it brings into light why they were willing to spend $50 million on a jersey patch, right? If they can get $2.8 billion in a couple months of new customer deals, $50 million for brand recognition is not that crazy. The problem with IREN is that people have been wanting a lot more than $2.8 billion. They want 20, 30 billion because of all the gigawatts of capacity that they have. And that hasn't fully come out yet. But IREN right there, 8.54%. The stock got almost below 30 last week. Again, Nebius was at 160. Corby was almost below 70. So a lot of these names got hit pretty hard. Any piece of good news, I feel like, is enough to get a bit of a bounce. And IREN right there getting that bounce based on that deal that they put out. Now, on top of that, the actual bigger deal was not IREN this morning, at least in terms of how the stock market reacted to it. It was Hut 8 Mining, which has done better than pretty much every neocloud when I was looking at their year-to-date performance based on a variety of different deals they got. So Hut 8 Mining right here, 15-year, $9.8 billion AI data center lease. This is the second one of these deals that they've gotten, right? And so this is what people are kind of saying about IREN and many of these other neoclouds. These deals need to be in the tens of billions, not in the $2 to $5 billion range to really get the market to react to it, which is why Hut 8 Mining is getting that reaction in the pre-market. This is at the Beacon Point campus in Texas, doubling the same investment grade. Tenants contracted capacity is 704 megawatts. Again, IREN has, I think, if I'm not wrong, 4 gigawatts of capacity, something like that. So, they have the capacity. The question is just signing on to those deals to be able to fill that capacity. The deal fully commercializes the 1 gigawatt campus and brings its total base term contract value to $19.6 billion, with expected average annual NOI of about $1.31 billion. So you had a lot of deals this morning, 2 of them that were just announced when I went live, and then a few last week, and then a bunch this morning. So Hut with Beacon Point, $9.8 billion. CleanSpark last week, $6.6 billion. Nebius, $1 billion with Reflection AI. SpaceX also had about $6.3 billion with Reflection AI a couple of weeks ago. They also were rumored to get a deal with the Pentagon on Friday. We don't have any official updates on that, but that was another data center rumor deal. Wolf, $19 billion deal. You got this Microsoft AMD deal this morning, and you have Google, the information reporting for those that are just joining, potentially working on a new chip called Frozen V2. So if it's called Frozen V2, I would imagine that Google would let it go into the AI system because it is frozen, and that will help it unfreeze the chip so that more people can get access to it. But as a result of that, you've just got a lot of this AI semiconductor build-out news that is not slowing down. And as a result of it not slowing down, I think that's why you're seeing a little bit more of a, pre-market bump based on the based on the headlines. That's why these names are going up. Anyway, I can see people don't like animated films for some reason. Whatever, party poopers, whatever. It's a Monday morning. You got to be excited here. For those that are just joining, this was the big headline, I think, to get the pre-market to be up a little higher. Mediators have proposed a 10-day cessation of strikes to find ways to revive the Iran-U.S. interim deal. As per Reuters, that got oil to come down, and that got the markets, along with all those AI deals, to get a little bit of love. Domino's, they crushed earnings. They did miss by 2% on EPS, very small miss. Their guidance was really good. Revenue, they beat by 1%. That stock was up 7%. It is currently still up 7%. So Americans continue to eat more pizza. And you had Domino's have a really good result. AMC actually also had some pretty incredible earnings as well. AMC, I believe it's still up 20% pre-market. AMC is up 14% pre-market. They reported their second quarter 2026 results, delivering the highest quarterly revenue and adjusted EBITDA in a century. I went to an AMC theater over the weekend to watch The Odyssey. It was an enjoyable experience. Obviously, ever since COVID, AMC has been taking a beating. But this was incredible. I mean, either movies are making a comeback or people are wanting to go back out into the world and socialize. But highest quarterly revenue and adjusted EBITDA in a century for AMC. I mean, it definitely makes you think the economy's kind of doing okay if people can afford to, go out, spend $50 at the movies and buy some popcorn, and maybe things are not necessarily as horrible. Now, obviously, that's one way to gauge what's going on with the consumer. Consumer confidence was actually really good on Friday. We came in at 54 versus 50. That was another reason we got a bit of a pop on Friday. But, AMC, Domino's, these companies shouldn't really be doing that well if the consumer is struggling that much. And we have a lot more consumer earnings to see over the next couple of weeks, but it's at least a healthy sign as we get into Q2 earnings. Yes, highest revenue in a century and highest adjusted EBITDA in 106 years. It's kind of crazy. I mean, I know the stock really hasn't moved much for a long time, but I kind of couldn't believe that, which was incredible to see. All right, some more macro stuff. So again, the big story over the weekend was Kimi K3 announcing that they are massively compute constrained. As a result of those compute constraints, along with what the Databricks CEO said, along with the Iran deal and the Hut deal and the Microsoft AMD partnership this morning, you've just got a lot of good semiconductor bullish momentum, and it doesn't look like that is slowing down. Real quick on memory, all the sell-side analysts came out over the weekend. They reaffirmed their price targets on memory. Their argument is that compute constraints, particularly around memory in the world of agentic inference, is only going to last, which means theoretically the memory dip should be bought. Take a look at this. Memory exports by country. China, Korea, and Taiwan have exported 40, 50, and $60 billion worth of memory exports. Back in 2016, it was less than 10 billion. So you've obviously had a ton of memory exports, which has led to the dramatic rises of Micron, SanDisk, SK Hynix, Samsung, etc. Now, once again, the forward PEs on those companies are laughable when you look at the growth they're putting up, the EPS, the free cash flow. It's just the simple question of, do you think we're going to be in oversupply anytime soon? And do you think the market is discounting those future cash flows because they're afraid of the cyclical nature, even if the cycle is going to last longer? One could argue that the fair value of Micron should be closer to 1,200, 1,500 if you take away that cyclicality risk. I mean, you could easily probably say the fair value gets closer to 2,000 if you put a basic tech PE on it and take away the cyclicality risk. If you add the cyclicality risk on top of it and discount their cash flows, yeah, you probably get to the price that you're getting at right now. So I think the trade obviously is crowded. Everyone knows about memory. So the question simply becomes, does the sentiment get re-rated? And that determines the risk to reward. But fundamentally, if fundamentals are about, hey, how much free cash flow, how much EPS is this company going to grow over the next 2 years? Yes, you would not put the forward PE that you put on a regular tech company that you're putting on these memory names. And that's why I think they're getting a little bit more of a bounce in the pre-market. That's about 5%. Oracle's actually down 2%, which is interesting. I think I know why. Okay, so Oracle and Bloom Energy, unfortunately, had a delay on their partnership, which is why you're seeing some pain right here. So Oracle's Project Jupiter behind the meter data center project in New Mexico that plans to use Bloom Energy is at risk of a 1 to 2 year delay. This was reported by Semi Analysis, so we don't know if it's effectively true. Oracle and Bloom didn't come out and say this. But due to permitting and pipeline building blockers, I think this headline right here is why you're seeing Oracle get hit right here in the pre-market. That's a really big deal for Bloom and Oracle, 2.8 gigawatts of capacity. So, that could be a pretty simple reason why that's going down. Yes, Oracle is tied to OpenAI pretty heavily. Any bad sentiment around OpenAI, that could also be bad for Oracle right there as well. Again, Iran got a deal this morning for those that are wanting. So did Hut 8 Mining. Google potentially announcing to build new chips. And then AMD and Microsoft expanding their partnership. Basically, the TLDR, Microsoft's going to be spending a lot more on AMD MI455 chips, and that is good for AMD. It's also good for Microsoft, but the street is not showing Microsoft that same love, given they're going to be spending that much money on this compute. Some macro updates. We've got 4 minutes until the market opens on this Monday morning. ServiceNow will have earnings this week. Also, yes, Archer did have a deal this morning as well with another company, Anduril. So they already had a partnership. This was just more of an explanation of their partnership. Archer and Anduril unveil an autonomous attack VTOL with first flight planned for 2027. This is called Thunder, a rainway independent hybrid electric aircraft designed to operate autonomously alongside crewed attack and assault aircraft. This is basically Archer saying we're not just making eVTOLs anymore to get you from one airport to the other. We are now getting onto the battlefield. That stock up about 3.8% in the pre-market. We kind of already knew this. They announced this partnership about 5 months ago, but you're seeing a bit more of detail and color on those partnerships as Archer starts to go more deeper into becoming a defense contractor. Here was an article by the Wall Street Journal over the weekend that I thought was really interesting. So they listed the top, let's count this, 3, 6, 9, the top 9 stocks that individual investors have bought in the month of July so far by net inflows. And some of these names are actually pretty interesting. By the way, Representative Dan Newhouse just put out his latest financial disclosure. He bought Micron, Accenture, Amcor, not AMKR, AMCR, Costco, and First Energy. He sold NVIDIA, Palo Alto, UNH, Adobe, AMD, and Google. So he bought a consulting firm, Costco, a couple of AI infrastructure plays, Micron and Applied Materials, then an energy play. And then AMCR also, that AI infra play. And then he sold NVIDIA, Palo Alto, UNH, Adobe, AMD, and Google. UNH obviously has had a pretty massive run since their earnings, as that stock has reverted back to somewhat of a mean around that 430 range. Okay, these were the top 9 stocks that individual investors have bought so far this month. SpaceX at $320 million. Intel at $170 million. Ondas at $120 million. Pretty incredible to see Ondas in the top 3. You have Oracle at $70 million, Iran at $50 million. Then you have Microsoft, Alphabet, Amazon, and Tesla. So the last 4, not that surprising, but the first 5, pretty damn incredible. SpaceX, obviously that stock has fallen 40% this month. Got delayed or fell another 5% after their Starship launch got delayed on Friday, which Elon did say that it should happen over the next few days. So maybe that catalyst turns around. But SpaceX has been the number 1. Then you have Intel, which has taken a pretty big decline from 140 to 99. Ondas, which has gone from like 14 to 6, but that drone thesis with a $1.5 trillion budget, that might be getting the market excited. And then you had Oracle and Iran. And so we're going to see this week what ends up happening. Can we recover a lot of the ground that we lost? Can we gain some more momentum? We talked about a lot of AI headlines this morning that hopefully should at least soften up some of the weakness in the trade. If oil can continue to go down, which it is down so far in the pre-market, maybe we can start off this Monday morning in the right space and hopefully go further for the rest of this week. All right, Monday morning, no mute, gang. 9:30, Monday, July 20th. Thank you, everybody, for being here. The stock market is now open. Wake your asses up. Let's get into it. The Googs, 1.9% up, based on the potential rumor of them building a new chip. As per the information, Google hit 342 last week on Gemini 3 Ultra Pro being delayed potentially. So you had one catalyst that was negative for them. They were at 370 before that catalyst. One catalyst that's positive for them right here in the pre-market is that stock is up 2%. Microsoft goes down 1%. Nabesis, that's up 5%. NVIDIA, that's up 1%. S&P 500, 747, trying to get back to 750. would be really nice. That's up 0.5%. Robinhood, which got upgraded to 160 today from Bernstein, 130 to 160. Basically, they said prediction markets, perps, all of that market share is starting to come to Robinhood as they are expanding into a variety of different verticals, and they are pretty bullish. They have their EPS forecast about 39% above consensus for the next 2 years. And that's why that stock has a 160 rating on it. SoFi, that's up 0.17%. Meta, which took a pretty ugly turn last week, even after really good updates, that stock is down about 0.26%. SpaceX, that's up a little bit. Rocket Lab, that's up 2.3%. Rocket Lab almost was below 62 last week. Now it's 68.97. AMD up 3.63. It was up 6%. Now it's up 3. So from 530 to 514, but still green based on that Microsoft news. IREN is up 9.5. Touch 37, just below that right here, 36.74. Was at 33 in the pre-market based on that new $2.8 billion deal with leading AI labs, as that stock's up 9%. Domino's Pizza, that's up 6. The Goog's really getting more love. That's up about 2%. PayPal has rejected the Stripe $53 billion offer. That stock is flat. If you believe they will get bought out at $60.50, then there is a bit of an arbitrage there on PayPal. Where is Mr. Palantir? 132.80. All right, so the software name's not really getting destroyed, even though the semis are getting some love again. How about ServiceNow? That stock's down 2, but getting a rebound. CRM, that stock's also down about 1.2. Adobe, that stock's also down 2. Okay, so some of the software names are indeed getting hit. How about Shopee? Shopee's up. Reddit, which took an ugly beating last week, Reddit's down. That's weird. All right, so Palantir and Shopify are up in the software space. Microsoft, Adobe, Salesforce, and ServiceNow are down. And then Reddit, which was pushing 210 last week, now at 178 is, I don't know. I don't know why they're getting hit as badly. Maybe because Meta's getting hit. Zeta right there, 2131. That's also down about 1.7%. So a few of the software names getting some love. The other one's getting hit. Figma right there, that's down about 1.64%. Cypher, that's up 10%. Did Cypher announce a deal, or is that piggybacking off the data center momentum? Because I didn't hear a deal for them this morning. But they are indeed up 10% right now. AAOI, that's up about 3.59%, as that's green. CoreWeave, wow, look at CoreWeave go. 6% following Nebius. Again, we really have got to see the semi names hold on to strength, close appropriately above certain averages, just not give back their gains in the middle of the day like they've done for the past 3 weeks, in order to at least get some sentiment coming back that's a bit more positive on the semis. Nebius, 190. CoreWeave and Nebius following the same trajectory right here. Rocket Lab goes red. Tesla barely up, 381. Apple again had a nice big move last week. Apple hit all-time highs, 331. Apple down a little bit on the day, but still holding on to the 330s. Meta at 643, not moving too much. Micron, 894. Micron also having a great day. So your memory names not giving up the momentum. SanDisk at 1438. That's up 6.2%. Western Digital, that should be up 4.5%. BM&R announced today that they are likely, that they're very close to that 5% of ETH goal that they have. And so they acquired more ETH over the week. And they're getting close to it at this point. 2.5%, as Bitcoin and Ethereum did have a pretty good week last week, as they're starting to at least gain some momentum that's coming back. D-Wave, that's up 2.8%. SMH, that's up 2.6%. IONQ, your quantum names getting a little bit more love. United Airlines, that's up 1%. And then Dell, which fell to 380 last week, back at 402, obviously down from 490. So a lot of those chip names took some ugly beatings, but they are starting to come back. AMD getting some buyers to step in right there, 517, as that continues to go green. Archer on that Anduril partnership, that's getting some love, 9%. That's up about 39 cents. So your Mag 7 today, at least in the open, are split. Google, Amazon, NVIDIA, Tesla green, Meta, Microsoft, Apple red. Apple based on the run it had last week. Microsoft's very close to flipping green, which would be nice to see even after giving AMD that partnership. And then Meta right there kind of stuck in that 640 range. Google, based on that information announcement, might be the reason why that stock is going up. IREN getting a breakout. I would say 14% is a decent chunk of momentum. Look at Nebius as well. Yeah, I think IREN, Nebius, and CoreWeave together are choosing to go higher right here. Nebius 193. I mean, when Nebius moves, she really moves to the upside and to the downside. So maybe that 195 range would be a really nice spot to close above. IREN, if we could just get back above 440, I think the street would be excited. 33 to 38 that you're seeing right here. AEHR, they had a great earnings last week. I think they just reported earnings the day before everything kind of crashed. So, that stock went from being up 50% to being up 20%. But 86.95, they have continued to do very well. That's helping the Lumentums and Coherence of the world, which are your photonics names, as Lumentum continues to go up 6% right here. All right, so a lot of headlines this morning. Some of them bullish for geopolitical stuff with Iran. Crude continuing to fall 0.5% at the open, which is nice to see. Some of them more bullish in the AI space, but you just have a lot of things that are at least pushing back against some of the headlines from last week that, made people think that AI was dead. Netflix is down another 2% because they are launching a new senior notes offering to refinance its debt while keeping their total debt roughly unchanged at about $14.4 billion. So they're launching new debt at a cheaper rate to pay off their old debt. Again, I don't think the stock is down because of that. I think the stock is down because the earnings just weren't the best. But Netflix right there, 67.22. It now trades at 18 times forward, which is half of its historical price earnings, which has been 36 over the past 5 years. So you're getting about a 50% discount on that PE. Adobe goes down. ServiceNow goes down. Salesforce goes down. Honestly, Palantir and Shopify are two of the only SaaS names. I think maybe Cloudflare. Yeah, CrowdStrike, MongoDB, Snowflake, Datadog, Palantir going for 134 are your SaaS names that are up. The rest of them, even Cloudflare, are down. And they probably should be down because if the semis go up, the software names go down, which is kind of been the story this whole year. NVIDIA, 207. Nebius, 194. I'm seeing a lot of volume being accumulated right here on Nebius. Let's see if that's real or not. IREN, 38.58, as that is also up 14.6%. NVIDIA, 207.46. So NVIDIA is, I think, your biggest indicator right there for semi momentum, or at least semi sentiment not being bad. Morgan Stanley came out. They said that we think the memory stocks are at an attractive price, but our best risk to reward is Broadcom and NVIDIA. So Morgan Stanley going down the route of two names that are probably safer than the memory names, but obviously are not going to grow EPS and free cash flow the way the memory names will. So their top picks in the semiconductor space, as per this morning, are Broadcom and NVIDIA, but they still think the memory names are attractively priced at these levels. Shopify, 124.79. Reddit continuing to get hit. Not sure why Reddit had the decline it had last week, because Meta did fine, and if you're comparing it to ad revenues, it doesn't look like ad revenues across Meta, Pinterest, Google, Reddit are going to be off in Q2. So I don't know what got the street upset about it, but took them down from 200 back to 180. Oracle, that's still down about 1%. Palantir, wow. Palantir really making a nice move right here, almost being treated as an AI infra play versus a software play. Rocket Lab as well, trying to get into the green. SpaceX goes red again. Peng, this stock got up to almost 90, dude. Why is this down 10%? What happened to Peng? This should be up with the memory names. This is effectively a memory stock. I don't see any dilution. I mean, they diluted last week, and the stock fell when they diluted. The 10% is weird right here. But yeah, 90 to 54, $2.78 billion market cap. This one's obviously been getting hammered. It got downgraded. Okay, maybe that's the simple enough reason right there for Peng. AMD back to the 520s. That's green. Applied Digital, that is also up 9%. So Applied Digital following your Neo Clouds right here. Nebius starting to show a little bit of weakness. Same with CoreWeave, but the others coming back into fruition. Figma right there, that flips green, 24.16. Figma, it was stuck at 16 to 18 for a while, and now it's kind of getting stuck between 22 and 24, but it has seemed like it at least got out of that whole Anthropic's going to kill you discussion. And that's why the stock is up about 30% from those levels. Intel, which got absolutely destroyed last week, fell to freaking $89. Trying to get back over 100 right here, 99.80. That's up 5%. And Intel's not conventionally cheap, but that whole premium around the TSMC of America thesis is been part of the reason why people have bought in, along with Trump and Jensen owning a piece of it. But Intel right there, up 5%. Bloom probably should be red today. I mean, if their site with Oracle is going to get delayed, then yeah, I would imagine Bloom and Oracle take a bit of a hit. Why is SoFi red? That is a good question. I do not have the answer to that, especially because oil is actually down today. So rate hike expectations, I mean, they don't literally move with oil, but they have been somewhat correlated. Although you did have a couple of Fed governors last week kind of insinuate that rate hikes are inevitable, which I also think added to the volatility of last week because, some of the Fed speak wasn't that fun to hear, especially from Waller, who's usually a dove. But nonetheless, some of those names are still taking a hit that are derivative of the rate cut play. A couple of different macro stats right here. So speaking of oil and rate cuts, crude oil in the United States, we really can't get an increase on the price of it. Why? Well, it would be bad for stocks. It would be bad for the American consumer. Gas, by the way, is back above $4 in terms of the average price in all 50 states, as per the data we got this morning. But also, we don't have any of it left. We only have 43 days of supply in the Strategic Petroleum Reserve. It is the lowest amount of crude we've had in the past 45 years. It didn't even get this bad in 2022. As you can see, in 2022, it got bad, but in 2026, it's worse. So part of the reason we were able to somewhat weather the storm back in March and April is because Trump started unloading a ton from the SPR. Unfortunately, when oil got back down to the 65 range, we didn't aggressively buy more. And now we have about a month and a half left of supplies if we actually wanted to let it go. And we're not supposed to let it go to balance oil prices, right? Like it's emergency reserves for a reason. But if we have to, then I guess Trump will. It's just what happens when that goes to zero. Like from a national security perspective, that's not a good thing. So I ran right there trying to go for 40, $39 as that's up 16% on the day. So, another incentive that the administration has to kind of calm down this stuff with Iran because we legit do not have enough oil. Western Digital, that's up 5%. SanDisk, that's up 6%. Look at Iran go, man. It has been a while. I would say 16% is a really nice move. If you can get above 40 and more importantly, close above 40, just like Nebius, you can close above 190. CoreWeave, at least close above 75. CoreWeave right there, 79. I mean, close above 80 would be really nice, but some of these key levels, if the neoclouds can recapture, Applied Digital, maybe try to get back up to 30, that would be very, very nice to see. Barclays downgraded Peng. Okay, does anyone have the price target of what they downgraded them to? This must be a stock that doesn't get a lot of institutional coverage because for one downgrade to take it down 10% means that there's not a lot of sell side covering it. So the only person who's like monopolizing the research here institutionally has an impact on the stock. Goku says, dude, I just opened a giant position on Iran on Friday. Goku, that is incredible because now you are up 16%. And yeah, that's a good thing. I'm going to be honest, Goku. I just typed in Goku jokes Naruto on Google, but Gemini was being stupid and it couldn't give me a joke about your name. And I was going to off the dome try to make a joke about you buying the dip and your name being Goku and have that correlate to something with Naruto. But this is why we need to spend more on CapEx because I typed in Goku jokes Naruto and Google gives me a freaking Reddit link. Like, no, like it should know what I want to do. So I'm sorry. I tried. It's hard being a professional comedian. I really did try. But this is why AI is not taking the job of comedians. Iran, let's see her resistance at 40. She's trying. Oh, shit. It's Dragon Ball Z. Oh, my goodness. I thought it was Naruto. Isn't Goku from Naruto? No, but isn't Dragon Ball Z just a version of Naruto? Or are they separate shows? Oh, they're different. Oh, now Gemini wants to give me an AI overview. Dragon Ball Z and Naruto are two of the most globally influential. Oh, that's probably why it didn't give me a joke because... Okay. Anyway, this is why I'm not a professional comedian, you know? This is why I talk about the stock market more than make jokes. 190 on Nebius. Dude, it's really from Dragon Ball Z? I thought it was Naruto. Goku? That sounds like a Naruto name. Dragon Ball Z. 1644 on BMNR. I'm sorry, I don't watch anime, okay? If that makes anyone feel better. I don't even watch it. So it wasn't even coming from a position of strength on or knowledge of anime in general. It was I thought it was Naruto. I've always thought Goku was Naruto. Then who's the main character's name in Naruto? I thought his name was Goku. I thought it was freaking Goku. 195 on Marvel. That one was almost at 175 last week. So I'm about a really big rebound. Ondas, that's up 3.8%. IONQ, that's up. Fastly, that's up 2%. And then Dell, just below 400. His name is Naruto? Oh. Okay, whatever. We're just going to move on. I thought that was the name of the show, not the name of the... Okay, anyway. Cactus, I need an update to transition from this. Oh, wow. Thank you, Cactus. Oracle is building a $16.5 billion AI data center in New Mexico. That's bullish, right? That'll make us forget about Dragon Ball Z and Naruto. Barclays upgrades Lumentum and they cut Penguin. Interesting. So they upgraded an optics stock, but they downgraded a memory stock here. Maybe they're being a bit more bullish to the broader optics sector. Penguin down 10.7. Lumentum is, wow, up 8% on the day. Yeah, that $16.8 billion data center from Oracle, that is also facing the regulatory challenges that they're facing with Bloom, particularly around permitting. You know, this is what a lot of the AI enthusiasts have talked about for a while, which is that if we keep putting these restrictions and regulations on new data center capacity, it's only going to be bad for consumers, because at the end of the day, we need to build out the internet to get access to the internet. If we don't build out compute, we don't necessarily have access to compute, which is why we are compute constrained. AMD getting some red candles right there, 519. That's still up 5%. SanDisk still up 5.4% as well. Have the comments moved on from the past 5 minutes of dialogue? Have we moved on? Can we talk about AI? That's like saying who's the main character in SpongeBob. Okay, but I actually watched SpongeBob, so that's why. I didn't watch anime, guys. What do you want me to do? I didn't watch anime. Can't get mad at someone who is trying to speak on something that they haven't watched before. You can't even, it's not even rage bait. I didn't know Dragon Ball Z was different. Dude, Google really, okay, so it's funny that Google's getting the bid right here, because it's like, last week, they got the downgrade by about $30 because they were delaying an AI model. And the market was just like, oh, you know, you're just coming out with another model that's going to be commoditized, so we don't care. This morning, they're coming out with a chip. I have a couple more details on it. And that's why the stock is up. It's like, once again, if you're building the infrastructure, which Google has always been doing it, but if you're building the model, the market doesn't care, because the market's like, the model's commoditized anyway. But if you're building the chips that help build the model, there's better margins on it. And so you get a better interpretation of the stock. Google is targeting deployment as early as 2028 to ease its AI compute shortage. It looks like they're trying to do this internally as well. They're not even trying to sell these chips, but obviously that would give them a massive compute advantage if, you know, they didn't have to buy NVIDIA chips and they could start building more of their own. Though the design would trade flexibility for major gains in speed and power efficiency. It's called Frozen V2. It would bake parts of Gemini's architecture directly into the silicon, reducing data movement and the number of decisions required during inference. See, I wonder if they're going to Broadcom to help them do that, or if they're legitimately building this ASIC from the ground up, because Broadcom should be higher if that's the case, or Marvell, which are the, you know, two of the biggest Google suppliers in their TPU stack. If not, then, you know, if they're verticalizing it, then maybe Google gets even more of a bid because they're not spending that much on outside suppliers. The space trade has been messy. It continues to get ugly. Rocket Lab 6670. Where is ASTS 56.39 after that $1 billion convertible note they put out last week. Wow, SpaceX. Are we really going below 120? SpaceX was the #1 stock bought by retail as per Vanda Research over the past 17 days. 320 million. So the fact that this is down is actually interesting. Yeah, I don't see a deal on Ceasefire, but it's obviously tracking Iran and Nebius and all those guys, but I don't see any updates on Ceasefire. Wow, Iran 40. Let me check 40 resistance, folks. If we get above 40, maybe she's off to the races. Maybe she's just going to be flying from here. $40 resistance on Iran it's only 28,000 shares. That's not even a lot for Iran to bust through. So if the volume is there, I mean, 40 should be pretty easy. But then again, if the NeoCloud algos turn red, then it might get stopped right there. Bloom Energy 5% down as that's getting hit. Snowflake got hacked. Snowflake is up 1.72. Okay, the market seems to not care. Let me see if we have that headline. Snowflake. I know they had new compensation for the CEO last week. I'm not seeing Snowflake hacked headlines. I saw something similar to that last week. So if it was a big headline, the market probably priced it in. Now Snowflake has had a few hacks over the past couple of years. AT&T was the biggest one back in 2024, but that was not something that necessarily completely ruined the business. Same thing with CrowdStrike. Broadcom right there, 378 as that continues to go green. Elf also up about 7%. Amit, why is Google releasing all of this before earnings? Google did not release anything. This was reported by The Information. So now maybe Google might have texted an information reporter to leak this news before earnings. So you could be right. Maybe Google is trying to get some good news going into earnings. But if it wasn't Google, then this was a leaked piece of news. Maybe Google will talk about this on the earnings. The Google earnings will be the most important earnings this week because they are going to be the ones, as Nebius takes an ugly red candle right there. It just lost a VWAP, and it's about to lose. It's 9 EMA right there, 186.99. Google's going to reaffirm the CapEx trade, right? Google's going to reaffirm that we are either accelerating CapEx or continuing to spend our commitments. Maybe they're going to up their increase for 2026. So Google can't have a bad earnings, but I don't think anyone expects them to. So the question is it priced in? Google is not trading at an all-time high, but it's not that far away from all-time highs at $408 as well. SpaceX, wow, just straight down. Are all the semis dumping at the same time? All the semis are getting at least red candles at the same time. I wouldn't say they're dumping because they have not turned red. Intel back below 100. NVIDIA just lost 207. AMD loses 520. If the semis do end up continuing to go red, it will be very similar to the past 5 days of price action. And then you can probably see them pump by 12 p.m. and then dump by 2 p.m. So we're really going to need a divergence from that price action to get the market to be more excited about these semi names. The software names, ironically, are going down with it. So that's a little confusing. If the semis are going down, Salesforce, Adobe, ServiceNow should actually be going up. But they are not. Although you are seeing Palantir get a red candle. Oracle's getting decimated here. Microsoft going down red again. I don't see a market headline. I mean, maybe this. A Saudi commercial vessel has caught fire in the Strait of Hormuz after being struck by IRGC forces. Where's oil? We're at 82. We're still below 82. We're at 81.90. I don't know if that's enough of a headline. Maybe it's macro stuff. I hate to say that at 9:50 or at 10:30, stocks just go up and down at the same time. But really, especially in July, as a lot of hedge fund managers and institutional managers have kind of stepped away, it does feel like a lot of this is more automated, and the timings are, not as coincidental because you see it happen almost every day. ASTS continuing to go down. SpaceX down about 2%. NUAI is up because someone wrote in my opinion, unless there's fundamental news, someone let me know if there's fundamental news, but this stock is up because someone wrote a really big thread on it over the weekend on X That same person wrote a thread on Iran when that stock was around $3-4 a year and a half ago. So a lot of people are thinking that his thesis on Iran that ended up playing out, right? Iran now at $40 might end up playing out on New Era Energy, which I don't know the most about it, but from my basic understanding is trying to solve the energy bottleneck when it comes to AI. So, I mean, this stock is relatively popular. People have talked about this before, New Era. I think it's actually still up a lot year to date. Year to date, it's up 40%. It is down from $8 back in January. It was also at almost $7 back in June. So it has taken a bit of a hit. And now it's getting some deeper red candles, right? They're still up 16%. But yeah, I think that X thread is what is pumping this one. Applied Digital, it's also less than $1 billion company, less than 500 million. So obviously pretty easy to move. Micron getting hit right there from 898 to 882. But still up 3%. Okay, very nice. No more anime, Dragon Ball Z, Naruto discussion. Very good. Very, very good. We've effectively transitioned to discuss the stock market. Kuwait's army announces it has intercepted incoming missile and drone strikes. Okay, so a Saudi commercial vessel catches fire after being struck by IRGC forces, and now Kuwait's army announces it has intercepted an incoming missile, obviously, probably from the Iranians. Maybe Nebius now losing a lot more right there, 185. Micron just lost 880. Dude, it seems exactly like Thursday or Friday, but this time you actually have some geopolitical headlines, whereas last week you had the Kimi K3 headlines that, you know, created more of the pain. Robinhood's going to have one of the best Q2s ever, but unfortunately, you know, if the AI sentiment dies down, then trading volumes probably die down a little bit for Hoodie. So that's why that stock's getting hit below 100. 98.78 as that's down about 1%. Feels like a rug pull every day. Unfortunately, it has turned out to be a bit of a rug pull every day. Even if you're trading the open, you've just got to be a little cautious of trading the open in terms of directionally going long or short, because the first 10 minutes might make you think it's going to be a day where you can just take longs, and then, you know, you quickly realize you might have to go short. But then if you go short, you know, you might get stuck because these algos flip so quickly. And so Micron at 878, who knows? Maybe that's the bottom for today. And if that is a rebound back into the 890s, it would be kind of textbook. So even for traders, I think this market's just been very harsh with price action. Adobe right there, that's down 3%. Salesforce down 1%. ServiceNow still down 4% on the day. Mr. Zeta is down 3% as well. Amid, why is SoFi so affected by rate hike? So remember, Anthony Noto came on Basis Points, came on the podcast, SoFi down 2%. He explicitly said he thinks the reason portfolio managers that manage professional money are not buying SoFi in a world in which they are buying banks is because they feel SoFi has greater credit risk. And if rates go up, their loan originations will not be able to keep pace with the rates going up. And even if rates don't go up, if they don't get cut, SoFi is not going to be able to put up the growth that is necessary for a company that, you know, trades at a very high multiple compared to other banks. Obviously, SoFi has been able to keep up that growth. They just grew 40%, profitable, et cetera. But the problem is the perception. And Noto was very clear that he thinks it's a perception problem more than an actual fundamental problem. But perception is reality, unfortunately, a lot of times in the stock market. And so I think that's why SoFi is so sensitive to oil prices going up or down. SpaceX is about to lose 121, folks. Wow, just lost 121. Tesla loses 380. That's a nasty red candle on Tesla. There was a rumor that Tesla was ordering $50 billion of GPUs and doing a long-term partnership with Foxconn. Elon last night refuted that rumor and said that is fake news. So I don't know who started that rumor, but it's going to be really bullish for NVIDIA because, you know, 50 billion of GPUs is a lot of money, but Elon said no. That is not happening. Tesla right there, 375 as that goes down. All right, once again, this is how the market opens. Reuters was reporting there's a fire on a Greek cargo ship after being struck by identified projectiles. Oh my goodness, near the Strait of Hormuz. So there's a Saudi vessel that's on fire. There's a Greek cargo ship apparently that is now on fire. And then Kuwait is intercepting incoming missile and drone strikes. As per CNN, the United States is increasing their aircraft numbers in the Middle East. The U.S. plans to send an additional F-16 and F-35 fighter jets from bases in Europe, as well as an additional aerial refueling tanker. The additional resources could expand President Trump's options as he weighs how to proceed in the escalating conflict. All right, so I think a mix of algos plus some of these headlines around ships getting hit, that'll probably be enough of a reason to at least explain some of the downturn right here. But do we actually stay red throughout the day, or do we pivot is yet to be seen now. NVIDIA almost losing 206, Bloom down 6% as well. Keel is getting some love today because the rest of the neoclouds are going up. Did Iran break 40? No, 39.73. It's trying to go for it again. I think if Iran breaks 40, she's off to the races, but she's going to need some of the neoclouds to help her. Because if you have all the neoclouds breaking back, as Nebius tries to come right back here, so the buyer stepped in. I mean, see, if you went short at 185, thinking the 180s were coming back immediately, you have your EMAs flip, and then boom, almost back at 190. Just very volatile price action. Micron, yeah, 878, right back to 885. At this point, I think the data center names and the memory names kind of trade with each other. And then, you know, they bring the picks and shovels like Corning and Fastly and all those names along with them. At the same time, SanDisk right there, that's up 5.4%. Akamai, that stock is up 1% as well. I have not done any research on SLNH, but I think it's a really small company. Yeah, dude, like 200 million market cap. I kind of tend to at least require a few billion. But I have seen this ticker. I think it's in the data center space. It's just really small. And so it can move really quickly, but it's a penny stock, right? And like in the actual definition of a penny stock, not just because it's under $5, but given its market cap. It's just, look, the small data center, small semiconductor picks and shovels plays, they were rewarded a lot in June. They've been unbelievably punished in the month of July. Does the excitement that rewarded them in the month of June, you know, SLNH is down 20% in the past month, but year to date, it's only down 7%. So when did it get its run? It got its run from 71 cents in April to $2 in May of 2026. Yeah, so 3x from April to May. Does that level of excitement come back to the neoclouds is the question. And, or not to the neoclouds, but to the broader AI trade in general. Palantir 133.76 as Nebius gets back above 190. Okay, so if Nebius is 190, Iran should see 40. I think Iran sees 40. 20 cents. Let's see. Let's see if we get there. Did you see Stock Talks post on being bullish neoclouds? Yeah, I fully agree with him. I think his analysis is very strong here. However, he is also questioning, if you read his post, and I read it this morning, I think it's a really good post. He's questioning the assumption that the Mag 7 have to spend as much as they're spending. The U.S. AI strategy has thus far been built on the notion that a handful of companies spend trillions of dollars on massive data centers. That strategy is being challenged for the first time. Whether or not distillation is part of the Chinese strategy, the results are what matters. The results are competitive models being produced by more parties with less spend. We haven't found a way to outright prevent distillation. If we could, Anthropic and OpenAI would have done that, but that hasn't been the case. So the reason it's bullish compute and the reason I agree with him is because, and bullish neoclouds and data centers in particular, is because once again, if the cost, it's pretty, you know, basic market analysis, right? Like everyone, I don't even think this should be a controversy. If the price of a commodity goes down and it's useful, like oil, or in this case, AI tokens, more people will use it, right? So his argument is you're going to need a lot more data center spend, a lot more distributed compute, even if they're open source models. I think that's where, what's his name? All the neoclouds, Nebius, Iren, CoreWeave, and the data center strategy continues to become, really strong for the open source models. But it once again begs the question about the foundation models and what is their role in this entire journey. And that, I don't think we fully have the answer to yet. But obviously we're, trying to get the answer to it. Okay, Iran was like 10 cents away from 40, and they took her back down to 39.50. 39.90 to 39.50. So she's trying. Rick says, I was surprised the South Korean market didn't tank heavily today. Still money out there. Yeah, it was only down 5. I think it was just reacting to our markets from last week, which obviously weren't good. Where's SK? But if the memory stocks rebound today, then I think Kospi might be okay. SK Hynix 158, that's up 3%. Do you have a position in Voyager? I do not. It's one of the space names that, from a defense perspective, is getting a lot more buzz, but I have not looked into Voyager enough. Although I know they do have a partnership with Palantir, if I'm not wrong, from a few months ago. Elf, that's up 4%. Snowflake, that continues to be up 2%. Is SpaceX losing 120? Well, lost 121 again. So I think 135 is where people thought there was support. Obviously, 135 got violated, then 130, then 125. And now it's just a question of, like, is this thing really going below 100? $1.58 trillion market cap is what you have for Mr. SpaceX. I'm seeing more Reuters reports about explosions. Again, gas prices are back above $4 a gallon, as that was announced this morning. We got your Denny on. Let's get his take and see what he's thinking about the current state of these.
Flat, very calm since May 14th, when we first got to 7,500. Well, we're still basically at that level. So calm at the surface, but below that, a lot of churning around, a lot of rotating and correcting. But I think when you add it all up, what you really get is a broadening market. The small caps have done extremely well. Some of the sectors that have lagged, like healthcare, has really picked up. The financials also kind of stalled out a little bit there. I mean, when we were in June, I called it the June swoon, but now it's kind of looking like the summer stall. And that'll probably continue through August. I think we'll probably still be around 7,500. And then I'm still...
Northland Securities raised their Nebius price target to 410 from 248. That also could have been part of the reason why Nebius made a move today. I ran 39.20, starting to lose some of that steam. Micron, a couple red candles. So some of these AI trades, again, still struggling, but they have not flipped red yet today.
Thinking that the market will have a good rally at year end that'll get us all the way up to 8,250 on the S&P 500. And the reason for that is what I call FEMO, fabulous earnings momentum. Earnings have really been amazing.
Yeah, I mean, I think to get there, right, you want to add 700 points to a 7,500 S&P right now. You really do need the big groups in the market dominated by the tech story to re-engage on some level, I would assume. And I think a lot of the chatter coming into this week was maybe the momentum semi-trade has finally washed out and you've kind of reset there. And then, hyperscalers, maybe they look more reasonably valued. And so there's another bid to say that maybe the old leadership can reassert itself. Is that necessary?
I think it helps for sure, but there's certainly some very large cap names in the financials and in the healthcare and in the industrials that could continue to do well. I think one of the problems we have here is AI fatigue. Everybody's kind of tired trying to figure out who's going to make money in all this. And so what you're seeing is the market rotate to companies that everybody understands their business. Everybody knows what Cat does. Everybody knows what Eaton does. Everybody knows what Schlumberger does. So, even the energy stocks obviously are doing better in this environment. I think between energy as an overweight, healthcare and financials and industrials, which is where we are, recommending overweighting. I think the market could make new highs even if the information technology and communication services kind of just market perform, which is what we're expecting.
And that's really what's happened over the past couple of weeks. Obviously, you've had the cat's out of the bag, right, in terms of the AI trade and the momentum around the AI trade and how much excitement exists for the AI trade. Everyone knows what a lot of these semiconductor companies do. SpaceX really getting hit right there, 120.30. And because everyone knows what they do, you've seen leadership start to expand. Part of that leadership has expanded into the broadening out, which is why the S&P 500 is not at all-time highs, but not that far away from it. It's actually up on the day, 0.24%. Into healthcare, into financials, as Nebius tanks, which means Iran has to be tanking. Iran indeed is not tanking, but 40 is out of sight now, 39. And the price action is so atrocious on so many of these names that I think people are just like, you know what, I'm going into something that's a little safer and easier to understand, that maybe is not as volatile, but also is a bit more secure. And, that's where you get a Cheesecake Factory, an Elf, a Nike, a lot of these names getting some inflows as the semis kind of lose a lot of their love. Wow, that's crazy, dude. 193 to 182 within what, 20 minutes? Yeah, 20 minutes. Around about 20 minutes. I mean, it just completely ruins your interpretation of price action. Micron, once again, 873 right there. I think Micron lost VWAP as well. Meta 642. Micron is, well below it, $10 below it. Oracle 120. Okay, is this the moment to go short, or is this going to trap the shorts like it did 10 minutes ago? Let's see if the market actually lets these go into free fall, or if we get some movement out of here. Dell 387, that continues to get hit. A lot continues to get hit as Tesla also. Now, is NVIDIA falling with it? Yeah, of course, NVIDIA. 204 as that stock goes down. Interesting. So it'll be important to see how quickly the market lets these names continue to go down right here. Rocklab 6633 as the Qs go back below 700 as well. Amit, do you like Micron here? Look, I think the stock is cheap. I think all the memory stocks are cheap. It's just, once again, I haven't owned memory all year. I kind of just think everyone knows the story, so the alpha is not as exciting as it was. If you bought the dip when it fell from 400 to 300 on those earnings 7 months ago, I mean, that was the time to buy. Buying into strength, 500, 600, that was the time to buy. I don't know if 1200 to 870 is the time to buy for me. Do I think it gets back to 1200? Theoretically, yeah. Nothing has changed in the memory story. Nothing. It's just, I don't know if I want to be part of that memory story, because now everyone knows the story. And so I think if you have an average, below that $600 range, you don't need to sell, because you're technically right on the fundamentals of it. The fundamentals of it are very strong. It just doesn't make sense to enter at this moment. Although to hedge what I'm saying, if the AI trade is going to continue, memory's got to go up. Right? Is there a world where NVIDIA becomes a $10 trillion company and Micron doesn't become at least a $2.5 to $3 trillion company? Yes, that world does exist. But when you think of it, practically, it's probably going to go up with NVIDIA. So is Nebius. So is Corning. So is CoreWeave. So is Applied Digital. There's nuances between all these companies. But the trade is kind of, rising tide lifts all boats. Now, obviously, NVIDIA's underperformed Micron this year, because it's a really big company. But if we're going to be selling a lot more GPUs, we're also going to be selling a lot more memory. It's just that fear of the memory demand, supply demand imbalance on memory flipping or not being as aggressive as it has been historically, I think is what keeps the forward multiple compressed. I ran right there at 39.20 as that's trying to go up. Same thing with the optics. I know Lumentum and Coherent have had really good years, but unless we switch to copper, unless Jensen innovates a way out of optical networking, this is why he called Marvell the next $1 trillion company, right? He called them a $1 trillion company, not because, they make good movies about Spider-Man. it's because they're going to be a leader in optics, and that's not going to be slowing down anytime soon. That one definitely makes up for the Dragon Ball Z and Naruto mistake. Okay. That one, it's going to take a few of those to make up for it, but that one definitely helps make up for it. So from that perspective, I kind of just think a lot of the AI names are a buy in and of themselves if you believe in the CapEx cycle. But, getting exposure through different ones like Broadcom, NVIDIA, TSM, things that are a bit more safe is not the craziest idea. Meta's pumping? Why'd you guys say Meta's pumping? Meta's not pumping. Who said Meta's pumping, bro? Is that to get back at me for the Naruto thing? 21 cents is not a pump on Meta. Please do not play with our emotions like that. It is not a pump. Meta's dumping. Yes, that's better, even though that's also not happening. So yeah, anyway, that's my feeling. But put in the chat, are you buying the memory dip? Put in the chat. Are you buying? And if you're not buying the memory dip, what part of the CapEx trade are you buying if you are buying? I mean, for me, obviously, it's been the NeoClouds more. The NeoClouds, I feel like I can understand their business even better than the bottlenecks, because I don't think the NeoClouds are a bottleneck. I think the NeoClouds are cloud businesses, and cloud businesses are great. Google, Microsoft, and like cloud business, we know how to analyze cloud businesses. And the NeoClouds are scaling their cloud businesses at a level that Microsoft, Amazon, NVIDIA, or Microsoft have never been able to do, because the intensity of the demand for compute for these clouds is greater than what we saw in 2010 when cloud computing started to really take off, like by magnitudes. So I just feel like the NeoClouds are a bit easier, and they're going to win no matter what layers of the stack win, whether it's optics or memory or copper. Like the NeoClouds survive. Intel 98, as that one still is up 3%. So Occult says he's buying ASTS. Dude, the ASTS community is so strong and the due diligence is so good. I don't think anything on the company has changed in the past year. If anything, a lot of good things have happened. The problem is that damn dilution came at a horrible price. Like they needed to do it at a better price than what they did it at. And I think that's what's created, the sentiment shift that's obviously affected the stock to be stuck. But the long-term thesis on ASTS hasn't changed outside of some of that dilution. Microsoft, okay, that's a little bit of a big candle. I wonder if that's a delayed reaction from the what do you call it? From the AMD partnership they announced this morning. Bought some Microsoft last week at 382. Maybe we get a re-rating the same way we got with Mr. Meta, which at least from 550 to 640 is not horrible. Nebius, is that one still getting hit? Nebius still getting hit 181 as that goes down. Yeah, that just looks like a textbook pump and dump from the algos on Nebius. Now, granted, there wasn't any fundamental news on Nebius for it to pump in the first place outside of the data center sentiment being better from all the other different headlines that had really good news. But still, if Oracle's down 5%, probably hard for Nebius to pump. SpaceX, boy, is this one getting hit now, 120.40. She's also going down. Mr. Apple is down as well. Apple down 2. You're actually seeing a decent amount of leadership for the day start to fall off. Foreign Ministry of Iran says, quote, ideas have been conveyed to Iran by mediators for halting the conflict with the U.S. He added that Iran will spare no effort to stop U.S. crimes and emphasized that diplomatic efforts are continuing alongside military actions. He said Qatari mediators have reportedly offered a 10-day ceasefire framework. Why do they keep using this framework terminology, bro? All these different frameworks. Now we have a framework for the framework, a 10-day ceasefire framework because the 60-day ceasefire framework didn't work. Let's reduce it by 50 days. Maybe that works. Under this idea, Iran would stop attacks on shipping and allow traffic through the Strait of Hormuz while the U.S. would pause its strikes. Oh, wow. So the first ceasefire, just 50 days less. Yeah, no shit. They're going to stop attacking each other. That's the premise of the new framework. This word is pissing me off, bro. Framework. Like, these guys can't come to a deal, so it's always a new framework. Foreign minister said Iran has never been the first to break the Islamabad memorandum and described Tehran's stance as commitment for commitment, meaning it expects reciprocal steps from the U.S. side. It's so stupid, dude. It is just so freaking stupid. It is what it is, folks. It is what it freaking is. But maybe that's also what's hurting markets right now. Potentially. Nebius 179, Microsoft 393. 393. I mean, that should be good news theoretically for this 10-day ceasefire, but if the market doesn't believe it, then obviously that could be causing some more of the pain. Micron, wow, 868, as that's losing it there. The Qs below 600. Why ServiceNow down? I don't know. The software names should be up. Like, they should all be up if the semis are deciding to go down. So it's kind of weird. Palantir 9 cents away from flipping red as well. Palantir was pretty green on the day. As Dell gets dumped as well. Dell right there, 382, down 4%. So it says, I've completely ignored the conflict situation, too much back and forth. Yeah, it's not even like, I mean, every day it's the same headline back and forth. Like a new ceasefire to preserve the old ceasefire. It's got like, we still don't know who violated the first ceasefire. Was it the U.S. or was it Iran? Was Trump mad that they weren't letting certain ships go through? Did Iran say, hey, no, you guys, we didn't agree to this. The ships were supposed to go the other way. You guys made them go this way. Like, just not a lot of clarity on what's happening here as Iran does not make its way to the 40s, 38.60. Oracle below 120 is crazy as it did not hit below 120 yet, but it's 50 cents away from doing it. I think the key thing for Oracle right here is, look, if OpenAI is a majority of their backlog and the market is now worried that OpenAI can't pay for that backlog because of Kimi K3, can Oracle shift that backlog to someone else? And if they can, I feel like Oracle, which is also why I like the NeoCloud thesis, right? Because, you know, you have some level of flexibility. But if you're beholden to one customer, you know, that's where the market might be getting a bit more upset. Let's get an update right here on some of the AMD partnerships and more of what's going on with China.
So that is news. The fact that Microsoft is on board and they're going to be shipping very soon. The deal is another sign that AI chip companies in general are just no longer selling processors or the individual chips. They're selling complete racks that combine chips, networking, software, all into a single system. NVIDIA built its AI business around that exact approach, which is why NVIDIA's CEO always says that they're an AI infrastructure firm. Now AMD is doing the exact same thing. Microsoft joins Meta, OpenAI, Oracle as Helios customers. AMD told CNBC it expects tens of billions of dollars in data center AI revenue starting in 2027, with most of it actually coming from these Helios racks. NVIDIA, of course, still dominates the market, with Futurum estimating more than 95% share compared to just, shy of 5% for AMD. So there's a lot more room to grow for AMD. But the next phase of the AI chip race may not be about racks at all. The information reports Google is developing a new chip called Frozen V2. It's a code name built specifically for its Gemini models. Today's AI chips are designed to run many different models. Well, Google's idea is a little different. It would build part of Gemini directly onto the chip itself, eliminating some of that extra computing steps needed every time a user makes a request. And sometimes, that takes a lot longer because they have to communicate with each other. The report says the chip could be 6 to 10 times more efficient than Google's current TPUs, the tensor processing units, their custom chips, with the deployment targeted as soon as 2028. The trade-off is, of course, flexibility. The chip would be optimized specifically for Google's Gemini, betting that Google's model architecture doesn't change dramatically over the next few years. The next battle in AI may not be who builds the fastest chip, but who builds the chip around the model. For investors, it's another reminder that the AI chip race is just evolving as fast as the technology itself, guys.
Christina, thank you. Christina Partsinevelos this morning. Sticking with the chips, the SOX ETF trying to bounce from its biggest weekly loss since September of 24, pressured in part by growing fears about AI competition from China. Our next guest says, don't blame China AI fears for the rotation out of the chips. Joining us this morning, Bessemer Venture Partners partner Byron Dieter joins us. B, it's great to have you back. You do think this notion that corporates swarm into these cheap Chinese models is overdone?
I think that's very much the case. I do buy the rotation argument that people are doing a little profit seeking after the epic run up that the hardware stocks have had here. But this notion that Chinese models are suddenly going to crater demand and change these cost curves, I think it is totally misplaced. A model like Kimi's a fine model. It's memory intensive and slow, but it is performant. However, what people miss is that the open source story isn't going to be different this time than it was in cloud, which is they'll take some demand pressure off. They'll put some pricing pressure on various parts of the market. But whether it's Kimi or DeepSeek or one of these other dozen open weights models, they're going to find their place in the ecosystem. But corporate America is not going to chase fractions of pennies per token and embrace Chinese technology for their most critical data assets, market needs and product needs. I just don't see that story playing out. And I think the frontier models are going to continue to lead as they have for the last many years.
So because the models, A, are not as good, or B, they don't trust them, or C, they're not allowed to?
A combination of one and two first, which is to say that these models have solid performance, certainly when you put in a price curve. But when you overlay this to the overall price performance, especially with the memory input here. And then you include the fact that it's almost certain these will be proven to have been trained on distillation attacks on the US models, as time and time again they are. It's going to go to number two, which is corporate America is predicated on trust, data security, and collaboration with their vendors. The same reason that you have these tight relationships with the leading software and hardware companies today, that's going to continue. You are not going to see Fortune 1000 that are moving their data assets, their business intelligence, their employee records onto these systems. Think of the blow up we had over TikTok and the sensitivity of dance videos and consumer data. You roll that forward to corporate assets and it's just not going to play. And so
Now, again, corporations can do this if they want to locally host the models, so the data wouldn't go back to China. That would require them to invest in AI infrastructure, though, which, again, is bullish for AI infrastructure. This is why Palantir had that partnership with NVIDIA and Dell to bring your data on-prem. But realistically, the question is how many corporations are actually going to do that, right? And that's what the guy's point is. By the way, there might be some regulations on this. So this came out this morning. The Trump administration is reportedly considering stricter rules on Chinese AI models after the launch of Moonshot's Kimi K3. Options include requiring U.S. hosting providers to guarantee the security of Chinese models and accept liability for breaches, alongside potential procurement bans and export blacklist measures as Washington responds to China's rapid AI advances, aka, maybe Trump sees a threat to the broader CapEx trade with the proliferation of these Chinese models. I don't know if you can effectively regulate it out of existence, but that might be one route that they try to go down as well.
I do expect number three is going to happen as well. There will be some level of regulation to manage this so that the dumping on pricing that China's trying to do and the distillation attacks and the IP theft and the model competition won't be pervasive throughout our economy as we're trying to drive our own AI industry and make sure we continue to have the lead here.
But even if the American corporates don't necessarily all shift over to Chinese models, Byron, it ultimately does put pressure on the prices of these tokens. There's already, I think, a lot of pushback that you're starting to hear from corporate America on just how expensive these tokens are from the Anthropics and OpenAIs.
I see this taking some pressure out of the system because the frontier models themselves have said they can't keep up right now with demand. And so you're going to have low edge use cases. You're going to have early startups. You're going to have experimentation and test budgets that are finding their way there. And then you're going to find that the leading companies as they get more supply online, and back to the data center story, they're going to be able to walk the prices down on their models pretty quickly. You will also see that you've got sovereign models emerging and other open weights models emerging in our allied nations, the European West and India and Canada, that will also be competitive. They absolutely will have a part of the ecosystem, a role in the market. It's just wildly overblown in terms of what people think the impact downstream will be on the leading models and on the hardware stocks. Those cases are preposterous.
Byron, the fact that you mentioned that there is this continuing inability to meet demand by the U.S. Model builders means that, and that's just been the prevailing takeaway of this whole disruption story, which is they're just going to have to spend more and for longer on the hardware food chain and build more compute, and that's the way it's going to go. And that's why maybe the semis are up today, and you have the whole food chain is actually getting a bounce today. But is that net bullish longer term for OpenAI and Anthropic if in fact they're on this perpetual treadmill of having to spend and raise capital to do that? Where are the profits going to settle out in this ecosystem?
So I think you're seeing it attacked from multiple sides, which is, the introduction of chips, which you were just covering from AMD, and the progress of TPUs. You're going to see evolution in the models and architecture where they get more leverage. But you also see the unit economics of these models, and that's the story that I don't think the average viewer follows, is if you think of these as a cohort basis and a model release and profitability in that model, the unit economics are actually quite compelling. It's that when you stack these on top of each other, you're buying forward capacity because you're going to be training the next model and building the next wave of inference and the release there. And that's where the CapEx goes. And so they stack on top of each other. And so the profit story of these and the margin profiles of these leading frontier models can still be quite compelling and will be quite compelling. It's when you look at them in a product release cycle, like an iPhone, like a car, or like a software stack, where you need to map the cost dollars to the revenue dollars to then get the cash flows appropriately mapped.
Byron, we spent the last few minutes talking about the build out.
So once again, more bullish semiconductor companies around compute, but still the prevailing question as Marvell tries to break 199. The prevailing question is, do OpenAI and Anthropic have a business that we can reliably trust on as the center of this AI trade? And I'd be surprised. OpenAI, they already said they're probably not going public this year. Or they're at least delaying it. Anthropic is supposed to go public in November. I would be surprised if that still happens. I mean, in this type of market environment, yeah, there's plenty of hype and liquidity, but there's a reason Databricks is avoiding it. If there's any more updates by the Chinese labs, that's the scary part. The Chinese labs are going to have more updates over the next few months that are probably even more aggressive in terms of reducing token costs. I mean, if Meta is out there reducing token costs with their latest models, the Chinese open source guys are going to be there. So at what point does the market, private venture, et cetera, the Qs back above 700 start questioning Anthropic and OpenAI's ability to meaningfully beat public companies and deliver shareholder returns while effectively bringing cash to the bottom line on businesses that already have to spend so much on compute? Now, if you take away the margin or decrease the margin because you have to compete with the Chinese open source alternatives, then do they just become oil companies that are selling a commodity? Having said that, even if intelligence becomes commoditized, you would imagine Anthropic and OpenAI can figure out business models that allows the commodity of intelligence to be bullish for them, either by going after software companies, which I think they've tried, and I don't know if they've really successfully been able to do, going into hardware, which OpenAI is trying, and I'm just not that bullish on that, or coming up with some new type of business model that we don't really know of. OpenAI has those kind of revenue share partnerships with some of these other companies they're working with. But the goal of making a profit off selling a token, does anyone really think in 10 years companies will be making juicy amounts of profit by selling tokens? It's kind of like the internet today, right? AT&T, Verizon, they make money, but they don't make that much money from selling internet connectivity. The value of those enterprises haven't gone up exponentially. You're selling something that everyone uses. And so, and now this is one of the more interesting things that everyone can use because, again, it's commoditized intelligence. But is that going to be the bread and butter of the next generation of tech companies? I ran right there, still up 15. Akamai up about 0.5%. I think an AMD Anthropic deal could be announced this week. Semi-analysis says that they feel there is a very good possibility of AMD working with Anthropic, which, to be honest, they called the Meta Anthropic thing, so I wouldn't doubt them. And that in and of itself could be a catalyst for AMD as soon as their name gets put with Anthropic. I think their deal would be a lot more than the $10 billion that they're paying to Zucks, because they would be buying a lot more chips. But AMD right there up 4%. Amit, are you saying AI is a commodity? Yes, I'm saying the tokens that the models produce, effectively, I don't know how anyone could even debate that it's not a commodity at this point, given how the prices have come down and given how there's multiple providers for it. Which doesn't mean it can't turn into a business model, but the conventional nature of this like rapid accelerating ARR growth around OpenAI and Anthropic that, you know, Brad Gerstner speaks so highly of, like, either A, that's going to stop, or B, it's not going to be profitable in any meaningful way because they're going to have to bring down their prices to compete with other enterprises or other models that enterprises might switch to. Now, again, I am not an expert on fully analyzing how this is going to play out. So, like, you're trying to get updates every single day, and, you know, maybe Anthropic has a totally different interpretation of how they think of compute, how they think of tokens. Same thing with OpenAI. You know, maybe the Chinese models ultimately don't get better than the next best version of Anthropic, and the distillation isn't that strong. Like, there's so many variables that can swing it in the opposite direction. But the premise of selling tokens as a core business, I feel like, is starting, you know, to come into question, which is, again, not bad for the semi-trading. Just might be bad for Anthropic and OpenAI short term. AEHR, wow, this thing was up almost 7% today, now down 3%. Lumentum, is it taking it down with it? Lumentum's holding on, still up 8%, but your photonics names are now starting to get hit. Amit, are you a commodity? Guys, I can't be a commodity. Who else is going to make Dragon Ball Z and Naruto jokes like me? Whether you like the jokes or not is irrelevant to the question of it being commoditized. There's just not that many people that can make those type of jokes. You know, so by definition, it can't be commoditized. How's the air quality in New Jersey? The air quality is a lot better. Thankfully, I think it was really good for the World Cup. On Thursday and Friday, it was horrible. It was really bad. But by yesterday, it got a lot better. I think it was good for the World. Did anyone go to the World Cup? It was a bad game, dude. From what I heard and seeing some of the highlights, like, they didn't score until the last couple minutes. Although, from everything I heard, Spain was just the better team, and they played a lot better. So you got to give them that. But it was not really the most exciting game. SpaceX, are we below 120? We are getting close, but we're not there yet. What do you think about Bloom Energy? Again, that delay with Oracle is why they're getting hit. Bloom now below 200. Look, conventionally, high beta momentum falling the way that Bloom has fallen, 320 to 200 or below 200, it's a buy. Because for the past 2 months, every time it's had that type of a dip, Bloom in particular has rebounded very quickly. The problem is the high beta trade has kind of been re-rated aggressively in the past couple of weeks. And I'm going to show you guys a chart for why I think it's been re-rated as well. So I don't know if you could say Bloom's a buy below 200 because I still think it's expensive. Still trades at, 25 times sales, 134 times earnings. But, historically that hasn't mattered. It might start to matter now, which is the bigger issue with Bloom and a lot of these other names. No one here went to the game? No one went to the game? I think the tickets were like 15 grand, so I get it. Did anyone watch the Odyssey then over the weekend, if you didn't go to the game? So look at this chart. Hedge funds dumped tech stocks, this is for Goldman Sachs, over the last 8 weeks at the fastest pace in history. As you can see, 2026 right there, negative 10% of their sector gross market value has gone away from the tech stocks. So that's part of the reason that the dip on Bloom is not easily being bought. And then take a look at this one. This one's even more interesting. AUM in US levered semiconductor ETFs has dropped 63 billion from the June peak. when it was at 100 billion. This is a 40% decline, the largest drawdown since April of 2025. This also accounts for 63% of the negative 100 billion decline in AUM across all US levered ETFs. So SOXL, MUU, NVDL, all those levered ETFs, if you just look at this chart right here, 60 billion decline in the past month and a half, which means, I mean, obviously investors are pulling back on the leverage here. And when you're pulling back on the leverage, pulling back on the options, pulling back on the single stock levered ETFs, along with, you know, everything that's going on in South Korea in terms of leverage, you know, who's going to be the buyer to buy the dip when that much leverage is coming out of the system? And that's kind of why I think the dips haven't easily been bought and sustained their buying over the past few weeks. Okay, a few people saw Odyssey. Again, I thought it was good. I definitely think it's worth watching. I wouldn't watch it again. Like, it would take me, like Interstellar, I remember I watched it for the first time, and then like 3 months later, I watched it again, and I was excited to watch it again. I don't think I would watch The Odyssey again 3 months later, but I still thought it was a good movie. I mean, would you ever buy SpaceX and around what prices? Look, the problem with SpaceX is not even a question of like its potential and long-term ambitions. The problem is there's 96% of shares that have to be unlocked. So I don't even know, like if I say below 100, it feels kind of reasonable if you know, go out 5 years and look at what the revenue and earnings might be. But below 100 could happen in a couple of weeks. But over the next 8 months, below 100 is going to have tons of selling pressure if it gets there because of nothing fundamental around the company or the earnings or the profit forecasts, but because of shares getting unlocked. And so I don't even know how you could have a target to accumulate this name unless you just think the selling pressure from VCs and insiders is not going to matter, which maybe it's not. But until that's over, so a year from now, I don't know. I don't know what's an appropriate level to easily be able to accumulate. I did read The Odyssey. I read it years ago. I studied Greek mythology, so actually I was interested to watch it. I have not watched Project Hail Mary. I have to watch that one. Tess says you can never take film advice from me. You know, The Dark Knight, it's its 18th year anniversary over the weekend. I commented under that post, greatest film of all time, and I don't know why I got so much pushback. Like, if you got to argue with The Dark Knight being the greatest film of all time, I'm not saying it, you know, there can't be other contenders, but it's definitely up there. Lumentum, 7.9% as that continues to go green. The biggest announcement now outside of the stock market is where the hell is LeBron James going? Where is he going? And I'll connect it to stocks with one picture. Okay, I'll connect it to stocks with one picture. If he goes to the Miami Heat, which I bought 1,000 contracts on the prediction markets that he's going to the Miami Heat. He will be sporting that juicy Robinhood logo, baby. So that's kind of why I want him to go to Miami. I also think he has the best chance of winning a championship if he goes to Miami. And yeah, it would be really nice to see one of the greatest players ever rocking a Robinhood logo every single day. So that'll be fun. But I think he's going to Miami, dude. I think he is. I feel like I would have said Cleveland a few weeks ago, but then I looked at Cleveland's roster. I'm like, dude, if he wants to win, he's not going to Cleveland. So I think it's Miami. SpaceX 121.46. Where has Jensen been? That's a good question. Now, maybe he's in a bit of a quiet period because he has earnings coming up, but his earnings are the last earnings of the cycle. So technically, I actually don't know if he has to be quiet right now. But ever since he created a generation of bag holders on Marvell, he kind of he kind of dipped. Marvell, trillion. Now, granted, he probably made a lot of money who traded Marvell. But yeah, we have not heard much from him since then. Okay, maybe, I think this is recent. Was he in Japan over the weekend? I found a video here. Jensen and Japan's METI minister. Both with leather jackets. Japan, Jensen. Oh, yeah. So he was in July for the past 2 days. We don't have any videos or interviews of him being in Japan. I would imagine we're going to get those soon, so we should be getting some quotes soon. There's no way a reporter hasn't asked him about the recent, semiconductor decline and his opinion on it. I'm surprised we haven't got it. He went July 15th. That was 5 days ago. I'm surprised we haven't gotten any quotes from Jensen, from any reporters in general about last time this happened, he said, good, people can buy more. Remember he said that? That was in Korea? He was in Japan in July. I didn't mean in July. You guys know what I mean. He was not literally in July. Obviously. Duh. I don't know why anyone would say that, but the point is we haven't gotten a quote from him, and maybe he's deliberately chosen to not give a quote. But if any indication that we've gotten from Kimi K3 or the broader GPU constraints is that NVIDIA will be selling a lot of GPUs, and they're going to have 95 to 100% growth this quarter, which is what everyone's expecting. So will the market respect it? I don't know, but we should be getting something that's very productive for NVIDIA. Okay, let's see if we can pull up a couple of these things. So Semi Analysis did talk about K3 over the weekend, and they, continue to make the argument that Kimi K3 is only bullish for compute. I'm looking at a couple of different quotes they put out right here. Meta 643, Marvell, are we still below 200? We are below 200, kind of topped out at 199. Do you own Celsius? I do not own Celsius. I know this stock has been kind of, below 30. It's been kind of stuck all year. Fundamentals of Celsius continue to be strong. I feel like it's down 40% for other reasons, but their Pepsi distribution deal continues to be intact. The acquisition went well a year and a half ago. I'm actually not sure. I think Celsius was kind of hype when it was at $100. I think that's the issue. Like a lot of people thought it was going to be the next monster, and then the growth, after that May 2024 quarter just wasn't enough to keep up with the expectation that Celsius would have this unbelievable level of growth for the foreseeable future. I think that's the stock. That's what took the stock down. But outside of growth slowing, I don't think people are doubting the core thesis around their brand positioning. Reddit right there, 183.30. As that continues to go green. I also just never liked how Celsius tasted. Now, again, that's not a bear case. Just personally, I never liked it. But, a lot of people still tend to drink it. Okay, here is what Semi Analysis said over the weekend, which I thought was relatively interesting around this open source debate and where they think it's going from there.
Yeah, my view is that I believe the reason that this gap has closed right now is squarely put on the US government imposing restrictions on Anthropic and resulting in us not getting the actual best models that these guys have. And so they've artificially caught up, basically.
Interesting.
Clearly, we see this with Mythos versus Fable. I can't use Mythos. I can only use Fable sometimes if I ask it nicely. 5.6 Sol, I think our house view is that it's not the biggest model OpenAI has ever trained. It's not the size of 4.5. To me, they have a bigger model somewhere. And I think the result is that we're going to be able to only access frontier intelligence if government entities allow us to. And that's a very interesting change to the setup going forward. Because I think it represents an opportunity for many of the players that are in 4th, 5th, 6th, 7th place to catch up to a limit, at which point it's okay to release everything and start to battle for user share without really being able to find the frontiers.
They go on to conclude that, and look, Semi Analysis is a little biased because they sell semiconductor research. If the semiconductor trade is over, they don't have a business. This is a company that I think they did $100 million of revenue last year. Their research is obviously very, very, very valuable. So if the semiconductor trade is over, they don't really have a business anymore. So their incentive is to make sure that people are hyped on semi stocks so they can sell research. Having said that, I think I don't think they're saying it just to say it. I think they genuinely believe that Kimi K3 is going to proliferate more and more of the semiconductor stack to be used. But, you know, as they mentioned in the pod, if the frontier models can't do certain things that the Chinese models allow you to do, and they're more expensive, there's going to be adoption that shifts away. It's not going to happen overnight, but it will happen. And it will force, once again, a race to the bottom, which is kind of the concern around the frontier labs. Nebius right there, 182, Microsoft 395. The software name's still getting hit today. Oracle, a little recovery above 120 as Marvell loses 199. And that continues to go down. Did you hear about the Jersey Mike's IPO? Yes, I think they're doing a 1.9 billion valuation. Sorry, 1.09 billion. Oh, no. They're raising $1 billion. The market cap would be $8 billion. That makes more sense. Yeah, I haven't looked at the numbers yet. I would have to go through their S1. My gut tells me I'm not super excited to buy a sandwich chain. I also don't eat at Jersey Mike's, so I don't have that much personal experience with it. Having said that, you know, maybe the growth is a lot more exciting than not. But if these AI stocks continue to take a dip, I would imagine, you know, a lot of these names are going to grow a lot faster than Jersey Mike's. And so that's why a lot of these IPOs aren't as interesting. But maybe people go to Jersey Mike's as a form of safety, as consumer discretionary gets more funds away from AI. Micron right there, 875. As that goes down. I've had Jersey Mike's once or twice. I've had it like a decade ago. It's not that common in Jersey as you would think. Like, it's not everywhere. Like, there's more Dunkin' Donuts and McDonald's in Jersey than Jersey Mike's. It's good sandwiches, but I don't know if it's like... Now, if Chick-fil-A was going public, that's a different question. But is Jersey Mike's the most excited to bet on? I don't even know if they're overpriced or not, to be honest. I just haven't had them in so long. I mean, Subway has been like the major go-to for relatively cheap food, but you know, they ran how many years of $5 footlong campaigns, and they don't really do $5 footlongs anymore. It's like maybe it's a special on a day or two, or it's not really the good footlongs. It's like the stuff that no one wants to buy. So that, obviously the $5 footlong probably proved to not be that profitable for them. And the cost of inflation, you know, probably made it impossible, but that was their big marketing campaign. Okay, what other news do we have? Iran is reporting that they have just been hit, that Shiraz has just been hit by a U.S. airstrike. That is a city in Iran. Let's get an update right here around this Iran situation.
That the Iranians are not going to accept the memorandum of understanding he wants them to accept, particularly focused on the opening of the Strait of Hormuz. And so he's going to bomb them. And hoping and this is now the 9th day, hoping that through that he's going to degrade what they can do to disrupt the Straits of Hormuz and ultimately force them back to the table. The problem is neither side has an end game here. I guess the Iranian side is a battle of wills. We'll be able to wait this out. American politics won't be able to stick through this. But they're not winning. Only in some strange alternative universe can you call this victory when your military is eroded, your proxies are eroded. They can't really hurt their neighbors in the way they did. Your nuclear capability is eroded. But for them, the triumph is that they're still on the playing field.
Yeah.
And the U.S. can win every military exchange, but still not get the political outcome it wants, which is a political solution that the region and the U.S. and Israel can accept. So we're in this battle of wills at the moment.
Yeah. I mean, it's well said. Why can't the U.S. wipe them off the playing field? I mean, it is clear.
SPY's about to flip red, folks. Very close to it. So if we flip red here on SPY, maybe we start to see the rest of some of these names start to basically lose their intraday lows here.
That it is becoming really difficult to make a deal with them.
Yeah, so I've talked to people who've been involved in negotiations from the White House, and they're frustrated. They feel that the Iranians have turned down good deals that were helpful to them. They feel as though you have a political leadership that's negotiating this, but you have an IRGC that can still be the spoiler and attack at any point that the political leadership doesn't agree to what they want. That's not entirely true because, of course, there's overlap between the two of them, but that's the way they see it. And one negotiator actually said to me, if they're such great negotiators, why is it their people are so poor with all the resources they have, and the Emiratis and the Saudis are so rich? Well said. Okay, that's fine, but they're still on the battlefield. And I think unless you're willing to put boots on the ground, and not only are we not willing to, we're not actually structured to do so, then I think what we've learned is military tax alone can't bring down the regime. You still have a 1 million person army. You still have a strategic apparatus that doesn't seem anywhere near collapse. All of which we've underestimated the administration, I think, has underestimated their staying power.
I mean, is there a breaking point? I saw their currency, the real, is at a record low against the US dollar, which I think reflects the economic pain there of the sanctions, of the pressure on their economy. Is there a point where it's too much?
You would think there would be a point when there's too much. You would think there would be a point where the public would also go into uprising and say, you know, this has just gone too far. But the regime's ability to absorb pain is a lot greater than we thought all along, and the public doesn't seem to be in an uprising mood at the moment either. So I think the U.S. strategy has to aim at one of two things, either to bring about a capitulation, but that's not going to come without a lot more military attacks than we're even doing now, and including perhaps some boots on the ground in some places. If it's not capitulation, then what you have to do is you have to have the pain great enough that the Iranians at least would be willing to accept a peace that would be acceptable also to the United States. So the second part is what we ultimately are going to have to get to.
I think one of the most confusing things, and you alluded to this, is who is in charge in Iran. Are the same people that want to negotiate and come to the table with the president and his team, the same people that are putting out the news statements that they haven't agreed to anything, are the same people that are attacking ships in the Strait of Hormuz during a ceasefire? Like, who's in charge?
Look, there's a debate among experts that and some people actually think that there's a growing coherence of Iranian leadership. I know the negotiators on the U.S. side don't believe that's the case, and part of this is the Israeli strikes, U.S. strikes, but primarily Israeli strikes, took out the leadership with whom one could negotiate, and the next rung of leadership down is actually has less at stake. They are more radical. They have less assets, less say real estate than some of the people who had been in charge for a long period of time. The other thing you can't lose sight of is the aim was never to just defeat Iran. The aim was to bring about a more integrated, more peaceful, more moderate, more modern Middle East. And so ultimately what you want is Iran not only to stop being a spoiler, but you also want to integrate them in the Middle East. I've talked to the people who have been part of the negotiating team, and ultimately they'd like to bring the Arab and the Iranian sides together around this. And some of them even talk about, a post World War II European situation where you bring together new institutions, economic, security, and other institutions. That has to remain the goal, and that has to remain the vision. But we're a long way away from it at this point.
Fred, how seriously are you taking this this maritime ban that the Houthis announced against the Saudis today? And how serious is this Yemen-Saudi stuff?
Well, the interesting thing is the Houthis have remained on the sidelines, and we've been watching for the moment where they come out and come down on the side of Iran, because their interests aren't entirely, identical to those of the Iranians. So I don't know how successful it will be. I know the security people I've talked to have believed that the Houthis really do try to disrupt, that they have the capability to do so, but they could also be acting against their own interests. There have been quiet interactions between the Houthis and the Saudis, and I think they also could incur wrath maybe they don't want to incur. So let's watch that. How far they'll go, and then what kind of actions the U.S., Saudis, others will take against them.
Finally, if in fact you think we make more progress on the military side, what do you think the appetite in Congress is for more supplementals?
Well, we've already seen the appetite in Congress is not high to continue this war with their war approval votes. And also, the interesting thing is the economic cost isn't as great as many people had predicted. The oil price isn't quite as high. The inflation isn't quite as high. So I don't think you're going to get congressional support. But also the economic pressure on President Trump to change course is not as high as I would have anticipated by this time, though a lot of people say that's still to come.
All right, a lot of the semis officially taking a red move for today, as many of them are starting to get hit, or at least have their candles kind of give it right here. Intel 9740, that one not fully red, but very close to it. Nabesis 182. You know, the economic thing that he mentioned is important. I wonder how important it's going to be from a SPY is really losing a lot of weakness right here. I wonder how important it's going to be from a broader perspective around affordability. So Trump did tweet last night about the affordability stuff. And I mean, it's the first time we've kind of heard of talk about this more so than the Iran stuff, but he tweeted that I've just been informed that Giant Eagle, a great American grocery company, is going to be lowering prices by a lot across more than 300 products this summer through Labor Day to help hardworking American families. Giant Eagle, like Walmart, is stepping up in a big and bold way to answer my call to lower costs for working families. We will continue to bring prices down, just as we have for oil, gas, eggs, prescription drugs, all of which are dropping fast after the disaster that we inherited from sleepy Joe Biden. So, I mean, it's one of those things where it's like, okay, you know, this was the first tweet in a while where he's praising companies that are bringing down prices and starting to talk more deeply about affordability. But the obvious focus over the past couple of weeks, Bloom 197, down 8%, has been the Iran war. Has not been gas prices or grocery prices. And so we got a couple months until the midterms, folks. It's going to happen pretty soon. So I just wonder, is the talking point going to be around affordability, or is it going to be around safety from a nuclear Iran? Like, what is his pitch to the American people going to be to keep the Republicans, you know, continuing to be in power? We got an update right here. Cumulus AI orders 1,632 NVIDIA Blackwell GB300 GPUs. Looks like it's about 124 million 3-year AI inference agreement. Okay, good news for NVIDIA. Another 100 mil added into the revenue line. Market doesn't care too much. It looks like that's a startup, Cumulus AI. I've never heard of this company. Cumulus AI. Computer application company. Cumulus AI provides on-demand and bare metal GPU compute for breakthrough performance. Oh, I think these guys are in NeoCloud. They're not public, but they look like... Are they public? I don't think they are. No, they are. QMLS. Dude, has anyone heard of it? I feel like we haven't talked about this one. Market cap. When did it go public? It went public on Friday. Okay, that's why we haven't talked about it. Another NeoCloud enters the picture. Cumulus AI. It's down 31% since going public. Market cap is 312 million. It's actually down a nice 33% today. But they are spending 100 million on NVIDIA GPUs. Probably not one of the more exciting NeoClouds out there, but nonetheless, you've got more of them. Marvell, 195, SpaceX, above 122. I mean, at what point does BE become cheap? I mean, what earnings multiple do you want to pay on it? Like, again, there's two types of cheap. There's cheap because the stock has taken such a big hit. So, like, that's momentum-driven cheapness. And then there's, like, fundamental cheapness. And I think even the biggest Bloom bulls will tell you that, the stock went from $3 to $300 at 197. The earnings have increased, but has the earnings increased to the point where it's like an NVIDIA 2023 type of ramp up, where you would pay the higher multiple because you knew like the explosion of growth was going to make the multiple irrelevant. I don't know if that's happening here. I mean, the Oracle deal was good. The Brookfield deal was good. Are there more deals like that lined up to make the multiple cheap? Or does it even matter? Because when momentum comes back to all the semis, I mean, again, like if we get a nice green day on the semis tomorrow, Bloom's going up. It doesn't matter what the price is. It doesn't matter what the multiple is. It's just going higher. And it's been doing that, for the past couple months. There's more fundamental names like Micron that are actually cheap, right? From an energy perspective, Bloom has done one of the better ones. Our boy Jason's in the chat. Cumulus used to be an SDN software-defined networking company in San Jose. Jason knows every single company in San Jose or that has ever been in San Jose. Oh, yeah, I used to work for them. Oh, yeah, I used to sell them software. Oh, yeah, me and the CEO used to get lunch. By the way, did I ever tell you guys the story of when me, Stock Talk, Evan came to GTC in March? Jason already knows where I'm going with this. Jason took us to the worst lunch spot in San Jose. It was so bad. He was like, guys, trust me. And we're like, okay, Mr. San Jose, we trust you. And it was like my burger was so bad. I'm like, how do you mess up a burger? How do you mess up a burger? The meat was so bad. I'm never letting him live that down. He's like, guys, trust me. This place is going to be great. We were so hungry after the lunch because we couldn't even touch our food, dude. It was so bad. It was so bad. And we went to another place before that looked really nice. Saw their pancakes. I'm like, bro, this looks like a good spot. Jason was like, nope, trust me. It's called The Table or something in San Jose. Never go to that place. Yeah, The Table. I mean, look, I don't want to be rude or anything. I didn't have. It has 4.3 stars on Google. That's fine, but my experience was not the best. When an SJ get Vietnamese food? We actually did get some Vietnamese food in 2025. I was with Jason. We got some nice Vietnamese food. But the brunch was not the best. Meta flips green, 646. This one at least getting some more love right here. Celsius still red. Marvell flipping a bit more green. Okay, so Matt is number one in the stock draft, and this SpaceX short is really what has catapulted him to doing amazing. VG's, he picked VG right before oil spiked. So to be honest, in September, he can get rid of the SpaceX short, lock in a 30 to 40% win, and he can get rid of VG if oil starts coming down and lock in a 30% win there, as long as oil doesn't come down before that. But VG and SpaceX is what's leading the charge right here. Me, Chris, and Jason are at the bottom three because we are very heavy AI CapEx. And those are getting hit pretty badly. NVIDIA, little green. Circle, the Clarity Act. We got some updates last week saying by August 7th, that's their next update. 63.19 on Mr. Circle. Archer is getting some love here. Kind of feel like it's going to be a boring week until we get Google, right? Because what is the market going to price? What is the market going to trade on? I mean, yeah, we got some good AI updates this morning, but outside of that, Google's the key CapEx catalyst. You have IBM, ServiceNow, Tesla the same day as Google. That's going to be big for software. IBM, we already know, is going to be in the gutter, so ServiceNow better not mess up. But IBM, 210 as that one continues to get hit. I don't know if anyone thinks Tesla earnings are going to be good, but at this point, I don't know if the earnings matter for Tesla as long as it's not horrible. It should be okay. Then again, the problem with Tesla is the multiple so high that if the earnings are really bad, it can get smacked. So we're gonna have to look out for Tesla. Then you have Intel. That's important. That's really important on Thursday, right? going to have to show that CPU demand continues to be strong. You have Capital One tomorrow. You have Chubb. You have IBKR. You have AT&T this week, T-Mobile. So it's really Google. Google that controls everything here. Microsoft still up on the day at 396. It's interesting that Microsoft's up, but all the software names are down. There's like 2 good restaurants in Santa Clara, and one is a pizza place. Yeah, to be fair, I didn't stay in San Diego long enough to try out all their food, but I would imagine there's some good stuff there. All the banks crushed it last week. We talked about that. The banks did great. S&P flipping green again right here at 745. Rocket Lab still stuck. I feel like Rocket Lab might have taken enough of a beating today. Touched 63, back to 66. Have people been buying the dip on Rocket Lab at all? I feel like obviously this was same thing like Bloom Energy, trades at a pretty expensive multiple. Numbers might not easily justify the market cap, but very high quality company, very high leadership. They looted effectively. I mean, 57 was the low we got on Rock Lab in March. And I remember because I bought 10 shares that day at 57. That was literally March 30th. Below 60 psychologically would be ugly, but I wonder if we go back to below March price. Like, I don't see that easily happening, especially because it's already taken a more than 50% haircut at this point. Yeah, I don't hate selling puts here either. Yeah, ServiceNow will help us understand the SaaS apocalypse narrative if it's bad. The Iridium deal I thought was bullish, but nonetheless, they are spending money on it, right? So that's why I was surprised they pumped 15% that day. I was like, really? They're spending a lot of money on this. Like, it should be down. And the market loved it. The market was like, hey, this is how they compete with SpaceX. It's just 3 weeks later, the market's like, actually, they're spending a lot of money here. ASTS also still getting hit. What about Lunar? The other space names have just been decimated, dude. Lunar was $44. It's at $13.81. Is that the peak of this thing? 46. Redwire was like almost 30, right? 26. Now it's at $8, bro. Like, Rocket Lab's actually doing pretty good compared to some of these space names. Some of them just got demolished here. And we can all blame SpaceX for this. We can all blame SpaceX. Apple, 325. I don't think Apple's valuation makes sense either. I mean, like, I've heard all the bull cases. I'm a proponent of those bull cases, but when you look at the other Mag 7, you're telling me just because they're spending on CapEx, Apple deserves to trade at that magnitude of a difference based on significantly less growth? Having said that, it's Apple. It's safer. I do wonder, though, like, outside of the laptop, you're going to need another phone to keep up the super cycle. And I don't think the foldable phone is coming out in September. I think it's just like a 17S, like another bare minimum update. And I wonder if that's enough to keep things going, or if a new product actually comes out that's more exciting. BMR is buying back stock. That is correct, which I think is part of the reason this thing's getting a little bit of a move now. They should be buying back stock because they're below 1 MNAV. So buying back stock is actually cheaper than buying ETH. I mean, dude, BMR could get re-rated back into the 30s or 40s, in my opinion, very easily if ETH breaks out. Like, we saw MicroStrategy go up to 500 in 2024 when Bitcoin hit 100,000. I don't even think you need a crazy ETH breakout. You don't need 5,000, 6,000. You need at least closer to 2,800, 3,200. And that core thesis is intact. The staking, everything's been there. It's just, the timing of it was so horrible. So if ETH breaks out, I think BMR goes up. Same thing with MicroStrategy and Bitcoin. MicroStrategy, by the way, they did sell another 200 million worth of shares of MSTR. They have not bought new Bitcoin in the past 2 weeks. But will we get the crypto cycle, coming back? Yes, I saw the buyback on BMNR, 5 million shares. Or 5.5 million, right? It was announced this morning. I mean, good. They've authorized $1 billion in buybacks for like the past 5 months. So it's good that it was time for them to start doing it. Iran's foreign minister will travel to Pakistan. Iran's foreign minister will travel to Pakistan as per the INRA. BlackRock is eyeing more than $12 billion of debt for a new Texas data center. BlackRock is reportedly preparing to sell more than $12 billion of bonds to help finance an AI-focused data center campus in El Paso. Okay, so this is bullish. Obviously good for, data center spend and financing for data centers. I do want to say, though, Larry Fink is not the type of guy that I would take bullish momentum from. Why do I say that? He runs BlackRock, which manages 12 trillion of assets. I remember when the Bitcoin ETF came out, Larry Fink, remember he put out that article? He put out that article that young people have lost faith in the dollar and the economy, and Bitcoin is their salvation, and crypto is this. There's all a bunch of fairy tale bullshit to get people to buy IBIT. Guess what BlackRock's getting into? Compute futures. They want to sell derivative products on compute. BlackRock gets paid no matter if the asset goes up or down. Now, obviously, if it goes up, they get a lot more fees because you have more trading volumes, but they make money on the downside. They make money on the upside. They make money on their expense ratios. So when Larry Fink is bullish on, data center and compute, it's because BlackRock is going to make a lot of money on selling the financial derivatives that, enable data center compute to have a liquid market. And there's a lot of demand for it, which is why they're engaging in all this financing stuff. But I don't know if that in and of itself, is why we should be more bullish. 12 billion debt for Texas data center. You have the Circle CEO live right now. Let's see what he has to say about the state of crypto.
Fully reserved, not fractionally reserved, fully reserved dollar digital currencies. And we believe that the right way to do that was through the federal government, through federal law, and with a federal charter. There are a lot of steps along the way. We had to build a regulated digital dollar. We needed to see the Genius Act passed into law, which now stipulates that a large issuer like Circle needs to be regulated by the OCC. But establishing First National Digital Currency Bank, which is the charter name operating as Circle National Trust, establishing that bank as the first de novo digital asset bank by the OCC in American history is a very big milestone. It gives us an infrastructure role in this new digital economy. As a national trust bank, we can custody digital assets, stable coins, other tokenized assets, and it gives us the infrastructure to manage USDC directly as the largest regulated digital dollar in the world.
So but a lot of people thought that was what the Genius Act did, and what the Clarity Act, which is, I don't know if it's going to pass or not, is going to do. What?
Well, the Genius Act set the federal law. Under the federal law, a large stablecoin issuer must be supervised by a national bank regulator like the OCC. So we need to fit into their glove, as it were, and the right way to do that is as a national trust bank. And so we are basically conforming with the law, which will go into effect in January of 2027. So the implementation really requires us to evolve our own kind of fiduciary and regulatory apparatus as well.
So then next steps are?
Well, I mean, look, we're in my view, in the very early stages of the stablecoin market. It has really been a market that grew out of the digital asset trading market. It's now becoming a market for payments. It's now penetrating capital markets with major capital markets firms. But once the Genius Act goes into effect in January, every major institution, every major bank, every capital markets firm, payments companies, enterprises, public companies can all now build on this infrastructure, treat it as digital cash in the economic system. And that's a huge opening up. And that's why, analysts, look at this from a $1 trillion to several $1 trillion in the coming years. So we're at the start. And so for us, it's getting the infrastructure right, getting the regulatory infrastructure right all around the world, getting the technology right, and then building the right global partnerships as well.
So has it been a challenge? We were talking earlier about whether the street understands the story. Has guidance been a challenge for the street?
Well, look, as a newly public company, a lot of people pay attention to what's happening with stablecoins, how many are there, et cetera. You have to zoom out and look at a few things. One is Circle is building a broader full stack company. We're diversifying into blockchain infrastructure, operating systems for agentic activity, payment network applications. So we're broadening the stack, and those are new business lines, and understanding all those pieces and how they fit together. That's really key for the street. And then secondly is this transition from the kind of world of trading into this world of payments. That's also something people have to pay attention to. And so I think just weeks ago, Visa published a report on real economic activity, real payments activity happening on chain. And it's been an incredible story. As institutions and regulated firms get in, USDC's share of payments on blockchains has grown to about 70% at the end of June. And so we're growing how it's used in payments. And so understanding all those pieces, I think, is critical.
But people are worried about the growth in circulation of USDC, which is sharply lower in terms of growth rates than it was in the previous years.
Yeah, if you look at what's happened in digital asset markets as a whole, they're down, I don't know what it is, 50, 60, some of them 80%. Stablecoin market circulation for across the board, not just Circle, has sort of been kind of flattish, a little bit down. And so I think we have at one level, we have kind of headwinds of the cyclicality of the digital asset market, and that's there, and that's just a reality. We can't predict markets as well as anyone else. And then we have the tailwinds of institutionalization, regulatory certainty, technology maturation, agentic activity, payments activity. And so we have headwinds and tailwinds. Obviously, we want all tailwinds all the time, but that's where we are.
But does the charter change the economics if growth is slowing?
I don't think the charter changes economics per se. I mean, it certainly gives us opportunities over the long run to optimize different costs that we have, things like that. I think the biggest thing is if you're a big financial company, if you're a bank, or if you're a major public company, and you want to build on digital dollars, weave them into your treasury, into your operations, into your financial activities, you're going to want to build on top of a regulated national trust infrastructure. You're not going to want to build on top of just a payment firm. You're going to want to build on top of a substantial banking infrastructure. So the way it should change the numbers is it should drive growth. It should drive more major institutions adopting this technology, not just in the U.S. This cascades around the world. The U.S. has exported a regime now that is, I think, getting take up around the world.
Well, I remember we spoke, I remember IPO day, you came on and we talked about whether there were concurrent policy trends that would match what's happening at home.
Yes.
Has it gotten better, worse?
It is. I will give the U.S. government and Congress a lot of credit. We just celebrated the 1-year anniversary of the Genius Act in D.C. last year. It was an incredible group of bipartisan leaders that were there. And I've just gotten back from traveling all around the world, Asia, Europe, Middle East, South America, other places. Everybody's paying attention to the Genius Act. Everybody's trying to figure out how do they get their stablecoin rules in place, and really how to have reciprocity for what America is putting forward, which is these new exportable digital dollars. It's a very powerful vision. Governments around the world are all having to react. This is part of the new financial system. And so if they want to be part of the dollar financial system, they have to integrate to this new regulatory structure.
What about Clarity Act? Where does that stand?
Well, I think this week is potentially a significant week for the Clarity Act. We expect to see text. We expect to see how some of these open issues are being reconciled. There's a lot of back and forth. So it'll be a big week for it. We're watching it very closely.
If it doesn't get passed, what does that mean?
Well, so the critical law for Circle obviously was the Genius Act.
Yeah.
That's really critical. We now have regulated digital dollars and stablecoin infrastructure, and that's huge. Clarity Act, I think, is certainly more important for the markets side of things, exchanges, custodians, clearing, for all the market side of things. So we'd like to see that have passage. We think it's a very good bill. We think it's a catalyst for digital assets penetrating more deeply into the financial system. And that just is a growth driver for many different pieces of what we do. The infrastructure side of what we do, we're offering platforms to FIs to issue more digital assets. So it definitely is important to our business. It's important to the industry as a whole.
I guess
All right, so Circle CEO getting pretty bullish. I mean, the Circle CEO has always been a really well-spoken guy when it comes to communicating the headwinds facing the industry. Bitcoin right there trying to break above 65, and also the tailwinds. But in terms of his argument around the Clarity Act and Genius Act and the institutional global adoption, Palantir getting a little bit of a break here as well. Circle is up 6% today. Because of the U.S. setting the stage, this is kind of what Trump ran on. He wanted to be the country that would set the foundation for how crypto policy was then regulated across the entire world, which would allow the U.S. to create the leadership mechanisms for, adoption of that regulation. The question is just, can we get it passed in our own country? And if we can't, as Ondas also, Ondas got like a $7 million contract this morning. That is also potentially helping them up 6%. So if we can get it, done within the United States, maybe the other countries across the world will adapt to it as well. Alarm sirens activated at U.S. 5th Fleet headquarters in Bahrain. So you got more updates from Bahrain. We knew there were some strikes this morning on it. And then Trump AI security agency head has resigned. Who is the Trump AI security agency head? Chris Fall. He resigned today, as per Axios. Was this guy even here? How long was he in charge? Chris Fall. So he was there for 3 months. He was selected by the Commerce Department April 23rd. He's leaving July 20th. I'm sure there will be some questions about why he's leaving. We don't fully have answers for that, but the Trump AI security agency head has resigned. For those asking about the Sunday futures, so the reason it hasn't happened for the past couple of weeks, just quite frankly, is I've just been with family like for the past 5 Sundays. Obviously, I was traveling to Singapore, a month ago or like a few weeks ago. So yeah, Sundays is just getting hard, guys. It's just getting hard because like either my mom wants to do something or I'm with my dad, or yesterday I was spending time with my sister. So I kind of think Sunday futures, at least for now, are going to stop simply because there's just a lot of familial commitments happening on Sunday. And like last year, it was, just going through it. Last year, I was basically giving up time with family on Sundays to do the future show. But it's kind of hard, The weekend is, the one time I really do get to see them. Micron, by the way, getting a nice green candle, 870 or 860 to 885. As that one goes green. So yeah, I think Sundays, we talk about most of the same stuff Sunday night that we talk about on Monday. So it's one of those things. And then it's just like the overnight markets are kind of illiquid. So the price action, you don't really get a good glimpse of what's actually happening. Futures might be a little green or a little red, but the overnight stocks, they don't really have enough volume or movement to move. So yeah, Sundays, I think Steve will be taking over those at least for now. We are your family. That's true, even though family doesn't make fun of family for not knowing the difference between Dragon Ball Z and Naruto, but still, that is true. You are my family. It's just, yeah, Sundays, it's just tough, dude, because my dad wants to go somewhere, and then the whole Sunday I'm thinking, all right, I got to be back home to do the show, and it's like, you have to leave multiple hours before if I'm like, going out to dinner with family or going out even to lunch on Sunday. So it's one of those things where I'd rather make sure I'm ready Monday morning versus on those Sunday nights. What about the daily recaps? The daily recaps have been gone for a while, but they've transitioned to Twitter. The daily recaps are now on Twitter, and that takes a lot of time, dude. It takes me like 40 minutes every day to write up that daily recap. So instead of doing it video wise, I've decided to do it text wise, and I think it's easier for more people to consume on X just by reading it. But that is on X now every day. As long as you don't ditch on the opening close. I want to see how long I do the opening close. I think that's part of the reason though that I want to get a studio in New York next year. And by the way, there has been some progress on that. But part of wanting to do the opening close for a very long time is I want my own set, my own production, my own space. I want it to be like a legitimate media entity. Multiple camera angles, multiple microphones, having guests come through. Like there has been some progress on that. So I am really hoping that by the end of September, by the end of October, we can confirm a space, just because, I kind of want to make it more of a production than what it is today. Right now, it's just me, my camera, my laptop. That's cool, but I've been doing that for 4 years. I feel like it could be a lot more cooler and fun. So Hopefully, we'll have some updates on that towards the end of the year. And if we do, it'll be bringing the show to just a totally different level, in my opinion, in terms of production quality. Especially if we want to grow it, because whenever you want to grow something, you have to take it up another level. You got to do something, spice it up, change things if you're really trying to grow and make it even bigger than it is. And so that'll be the goal. But yes, the future is likely not going to happen on Sundays, but open and close, we will be here every single day. We're not going to Hollywood. You cannot do a finance show from Hollywood. It has to be in New York City. But, I definitely do want a bigger production to do it. But I also want to maintain my independence, right? Like, I don't want to license the show to CNBC or Bloomberg. And like, I want to build it my own, but there's more challenges to build it your own. You have to get certain types of financing from different partners, and you have to work with people you trust. So like the people that work on those CNBC shows, there's probably like 300-400 people all day that are managing so many different parts of like producing a show, which, just gives a more corporate feel. It's not as fun, so like if I want to maintain my authenticity, I have to do it myself, but I also have to figure out a lot of logistical things. As Marvell breaks above 200, talk about a bounce, dude. 199 to 195, now back up to 200. So that's gonna take some time, but I think we'll figure it out. Nebius back to 188, which I also think is very nice. 188.35 as that continues to go green. Steve will never leave NYC. Steve will absolutely never leave NYC. Ever. But I like being in NYC because there's just so many opportunities when it comes to finance. When do you think Tesla and SpaceX will merge? I think this is not happening for a long time, but it will happen. I think it's going to happen more out of necessity versus luxury, to be honest. But I think it will happen. Why don't you just sell compute? It's a good idea. I wonder how much convertible debt I could raise by selling compute. But no, I do think next year, I have a lot of ideas. I've been thinking about this for the past 2 months. I think we can take the show to the next level. I really do. And, I think it could just be more fun. It's still going to be me primarily. I just think, I don't just want to be in my room, like I want a bigger production. Like even for me to keep the enthusiasm and excitement, it does get a bit repetitive, right? You get up, you stay in the same spot, look at the camera, like the news and stuff is different and exciting and all that. But the workflow of just sitting right here, it just brightens up the day a little bit if you have to walk outside, go to an actual location. It's always the grass is greener on the other side, right? Like people who work corporate want to work from home. And then people who work from home are like, I don't want to go corporate, but it would be nice to like be in a physical location that's different that I have to travel to and interact with more people. And I think if we want to like actually get guests on the show every day in person, they're all in New York. The question is just being able to build the infrastructure for them to come through. So we're going to figure it out. Okay. Are we seeing anything else that's different here? We had the Bahrain news. We had the AI security agency head resign. Sell AK Media API to the highest bidders for fastest access to your yapping. We talked about that story on Friday, right? Truth Social is selling Trump's Truth Social API as a feed for $100,000 a month to hedge funds. It's freaking crazy, dude. Morgan Stanley actually came out and they said, we don't even think Trump's post moved the market that much anymore. So Morgan Stanley was trying to like downplay it. They're like, I mean, we think institutions might pay for this, but we don't know how much of an impact Trump actually has anymore. I would still say he has a pretty decent impact, but they are right. Over the past 2 weeks, when Trump has put out like some big tweet, I mean, the market reacts, but then like within a few minutes, it goes back to normal. It's not like it's the whole day is centered around that one tweet. So I don't know how much the market's going to care. Gavin Baker on CNBC. Okay, let's listen to him. He has started to feel that the bottom is in for these AI infra names. And let's get his take on what's happening right now in AI?
Just we'll see where we are in a year, 2 years, 3 years.
Yep.
My friend Well Dunoff once came on CNBC and he said, he was on the show Fast Money, and he said he tried to be slow money, think long term. And I think there's a lot of wisdom in that.
Yes. There is still a process, though, to witness the street getting familiar with the story, getting its arms around the possibility. And now we're starting to see some pretty thick reports, analyst reports. And I mean, I think every underwriter has a buy on the stock.
I will admit I do not know what the Wall Street ratings are, but that doesn't surprise me. And I think the big variable that maybe markets are missing with respect to SpaceX is they monetize a gigawatt of installed power at a meaningful premium to anyone else. They bring on those gigawatts of power faster and cheaper than anyone else, so they make the most profit per gig. And let's just say they bring on 3 gigs next year at their kind of announced monetization rates. That's $150 billion of revenue that's not in the model. And, bringing on gigawatts of power, it's really hard. They've proven they're good at it. We'll see what they can do. But I looked at the consensus, it was 73 billion. And that embeds very little for incremental terrestrial gigawatts that they bring on and monetize.
People are a little bit concerned, I guess, about the delay in the launch, right, of Starship. I mean, part of the bull thesis here is that they are able to do this much more frequently at lower costs. So any hiccup in that causes some concern.
Starship is a really hard engineering problem. And, I think they've made incremental progress each launch. But if you're a long-term investor, it doesn't really matter whether we get to reusability for Starship in 3 months, 6 months, 9 months, 12 months. And I would focus, respectfully, people more on terrestrial compute in the next 2 to 3 years, how quickly they can bring that on and energize those GPUs and rent them out.
You mean what they're doing with Anthropic, for instance?
Absolutely. I think you're likely to see a lot more of that.
There are questions about the sort of value of that as the technology changes very quickly and as these new models come out and leapfrog the old models, and especially if they're coming from China where they're open source and they're a lot cheaper, about the entire economics of the system.
I guess there are questions.
Yeah. You don't have those. No, why? Why? What's your thesis here?
So open source models fundamentally just shift margin percentage and margin dollars from the kind of model layer to the infrastructure layer. If you have cheaper tokens of an equivalent intelligence, we're going to consume more of those. And if you believe, like I do, that we are structurally short compute, then you don't worry so much about margins at the model layer.
And then that's why that feeds you to a bullish thesis on neoclouds and other elements of the actual infrastructure build, yes?
I mean, I don't know if I would use the word bullish, but I do think it leads you to an interesting risk reward. Neoclouds, Cerebras, NVIDIA, providers of compute, whether it be to frontier models or open source models.
But talk a little bit more about,
I'm surprised why he's not just saying it's bullish. What's the issue with saying, yeah, I'm bullish? It's kind of weird, right? He's saying it's going to be more distributed compute, but he's not going far enough to be like, yeah, it's bullish to neoclouds, who should benefit the most from open source.
Teasing out what you were just saying about, so we get these Chinese open source models like the Kimi one, and everyone freaks out that they're better and they're cheaper and they're open source. You don't necessarily think it's bad for OpenAI and Anthropic. Why?
Well, it may end up being bad for them, but I just think the fundamental principle, I think open source software like Red Hat, back in the day, now part of IBM, that is much cheaper than software. It's free. But a token, AI, when you consume it, it costs the same amount of compute, of watts, of energy, of CapEx, of OpEx to generate an open source token as it does to generate an Anthropic token.
So then why do corporates have to pay so much more for Anthropic?
Well, because it turns out that there is and this has been very surprising to me over the last year, that there is an enormous return to being at the frontier of intelligence. And I think the future is likely to be one in which maybe a majority of economic returns continue to accrue to these frontier tokens, but the majority of tokens processed are these very cheap open source tokens. And you can think of it, you use, if, every enterprise, they're going to have a symphony of AI models that they use. And you're going to have the conductor, maybe that's Anthropic, maybe that's Grok. And then you're going to have a lot of, people playing instruments. And those are these cheaper Chinese open source models that maybe have been fine-tuned on an enterprise's own data. They're worried about their data leaking to a closed source frontier model provider. And I think that is a likely future.
Where the U.S. frontier models remain sort of in charge when it comes to the corporate customers.
I think so. And there is also a lot of, Eric Vishria, partner at Benchmark, posted something maybe 18 months ago that I thought was fascinating. Just there may be as much lock-in at the product layer, at the harness layer, as there is at the model layer. And the products that Anthropic and some of the other frontier model companies have created, Cloud Code, Grok Build, around their models are, I think, an increasing source of competitive advantage and switching cost.
So I'm just trying to think ahead. Like, will a corporate have a lot of vendor diversity in this symphony that you described? Can it be one player delivering a suite?
I think it is highly likely to be a multiple model future. And maybe some of these frontier models over time incorporate the ability, they make it really easy if you're Claude or you're Grok to bring in a cheap open source model that, maybe is a violinist.
Right.
And the conductor orchestrates.
Huh. I'm just trying to figure out whether companies will want to minimize complexity, minimize vendor diversity, keep.
Well, I think they'll want to minimize complexity, but they will also want the most intelligence per dollar.
Yeah.
One thing that's really unique about AI, for the first time in my kind of history as a tech investor, being the low-cost producer matters. Intelligence per dollar is what matters, and that is a function of what is your cost per token, and having the most efficient infrastructure is really going to matter, and then how much intelligence do you have per token. So to get to an equivalent answer, Kimi K3, which is a great model and an achievement for China, it needs 2 to 3x more tokens, and each token costs compute, watts, energy, capex, all of that. And so if you need to produce 2 to 3x more tokens, well, and so token efficiency, cost per token, I think you're gonna
matters. Yeah.
Yeah.
As long as American corporates are able to buy, I guess, to subscribe for. There's all sorts of regulatory questions there with China.
Well, I do think you will see. We do have a really great American open source company, and it's called NVIDIA.
Yeah.
Their Nemotron model is actually really good, and I think that they are probably throttling it to a degree. They don't want to scare and upset their customers, but I think they could very quickly bring an American open source model close to the frontier whenever they want.
Really? Do you have a position in NVIDIA?
I do.
Just for and yes. You do not in Anthropic and OpenAI.
I do not. I was a SpaceX investor, and there's been a detente lately between
We've noticed.
Anthropic and SpaceX, but that came too late for me.
Well, I'm curious where you see Grok actually competing relative to the two of them.
I think that the market reacted in exactly the wrong way to Kimi K3. It's wildly bullish for all of compute, wildly bullish for the AI and for trade. But I think it did really underreact to Grok 4.5 and Muse 1.1 from Meta. Grok 4.5 is on what is called the Pareto frontier, which just measures intelligence per dollar. And on some metrics, it's kind of outside the Pareto frontier. So you cannot get, at its level of intelligence, cheaper intelligence. And so
it's not as intelligent as the Anthropic or OpenAI models, but it is more cost effective.
It is more intelligence per dollar.
Yeah.
Someone was reminding me that, speaking of the SpaceX shares, that the XAI investment or acquisition came around 105. Do you see that as like a critical level for SpaceX?
No, I think the stock's going to do what it's going to do. I think there's a lot of people who maybe own stock privately and are shorting the stock to hedge that.
Right.
We'll see. And then there's always, for whatever reason, a big kind of New York hedge fund short case in Elon companies. And, there's a graveyard of funds that shut down because they're Tesla short.
Yeah. But a lot of people look at the valuation in this one.
And then that comes down to how many gigawatts of power can they add? and the estimates on the screen might be really wrong. And then what happens? Grok 4.5 is a 1.5 trillion parameter model. They're training a 2 trillion parameter model right now. I think the Cursor acquisition for 60 billion is looking very smart. That was doing 3 billion in ARR when they bought it. I think it's probably materially higher. So I think there's a lot of variables. They have to execute on a lot of things. We'll see how this 2 trillion model comes out, and after that, they'll probably be a 6 trillion and then maybe a 10 trillion. And we'll see how those training runs go, and we'll see how those models benchmark when they come out. But if they are able to bring on a lot of power and sell that to other AI players at very high rates, and they are also able to bring on enough power where they can also serve their own models at a very low cost, I think that could be very interesting.
It does feel like Wall Street has really put a premium on like the model supremacy over the cost so far.
I think that's a mistake.
Yeah.
Yeah.
Because that's the edge that you think Elon has.
I do think, to the best of my knowledge, he has, Jensen said, the speed in which you bring on a gigawatt is literally cost, because every day that you're constructing a data center, you're employing, and by the way, we should talk about this, like data center builds, they're amazing for blue collar America. You're employing a lot of electricians, a lot of HVAC contractors, a lot of plumbers at like truly unimaginable rates.
Yeah, New York doesn't want them.
Yeah, it's crazy.
Yeah, home builders can't get those guys.
Yeah, exactly. Yes.
Gavin, please come back.
Yeah,
it's good to have you.
Thank you.
Yeah,
this is
whenever
great.
you're around, it's great to have you.
Thank you so much.
Thank you. Still ahead, CEO of Archer Aviation joined.
Okay, some pretty bullish updates by Mr. Gavin Baker right there. Again, the kind of core argument I think he was trying to make, which is once again what we've seen, Grab getting a bit of a candle right there, up 2%. Nebius trying to get back up above, is this idea that open source is going to be obviously very bullish for the semis. Semis up 1.5% here. Palantir also getting a little bit of a breakout. And the more momentum around that open source, NVIDIA being the largest open source company with those Nemotron models, the better it is for the AI infra trade, even if it hurts the margins of the frontier labs, which, I don't think is anything too different from what some people have been theorizing over the weekend. By the way, shout out to Nevruz in the chat. He just graduated their master's yesterday. So congratulations. And Saturday was their birthday. So happy belated and congrats on the master's degree. Very, very, very cool stuff. And hopefully you are enjoying that new degree as you celebrate your birthday as well. Bitcoin right there also getting a nice move. 65,000 on Mr. BTC. 65K, 65,343, Palantir 133.60, BMNR 1649, Redwire that's up a little bit. Some of the space trade coming back. Rocket Lab from 65 to 66.30. Archer up 16. I mean, that announcement they made with Anduril was about 5 months ago, but I think the details of the announcement today being more explicit around their autonomous eVTOL battlefield products is what's getting the street to be a bit more excited. 15% up as Apple goes down. Yeah, if Apple's going down, which it is almost 3%, you're definitely seeing a little rotation into high beta as Apple's more of that safety play. Meta right there. Meta also finally going green today. 648 Micron. Trying to get back to 880. Why is crypto pumping? I actually don't know. I mean, the Circle CEO was pretty bullish. Maybe some of the updates he had around stablecoins potentially got the street excited, but outside of that, I don't think there's too much there. All right, folks, that is it for me. We'll be back on the market close. Don't have any earnings today, so we will get through all of our headlines. Tomorrow, we officially start off a lot more of the earnings. I think tomorrow you can officially say we are back to earnings. Capital One, IBKR, Chubb, Schwab, 3M, GM, Ally Bank, all those companies. And then Wednesday, Tesla and the Googs are going to be important. I think the summary of today is lots and lots of CapEx AI-related announcements. Microsoft and AMD, Google new chip, Iran deal, Nebius deal from Friday. You've got Oracle updates that are not the most bullish, but at least you got some updates on data center facilities that have to do less with the fundamentals around CapEx, more so around regulatory things, which are not bullish, but they're not, demand slowing down type of bearish arguments. We had Hut 8 Mining with a 15-year deal. So I think the partnerships we saw today, along with this NeoCloud buying $100 million of GPUs from NVIDIA, plus oil coming down because you do have some level of mediation, even though escalation is happening, is at least enough for us to get a bounce today. Maybe we don't, fully flip green across everything, but the bleeding from last Friday maybe gets to stop, which is nice. Okay, word of the day. What do we got? Let's see what we got going on. We'll be back on the close. Maybe some of this news is interpreted a bit more positively, as NVIDIA right there trying to get some green candles. Word of the day is saudade. A deep, bittersweet longing for someone, somewhere, or something that is absent or may never return. I promise I am not talking to ChatGPT about relationship advice. I don't know why what is, they usually gives us market words. What are these words? Looking through old photos, she felt a quiet saudade for a chapter of life she knew she could never relive. Why did it pivot from markets to this shit? That is so weird when it chooses to do this stuff. It's a Portuguese word? Okay, let's see how to say it.
Or profound melancholic longing for an absent. We are looking at how to pronounce this word in English. This is a word of Portuguese origin, designating a deep emotional state of nostalgic or profound melancholic longing for an absent something or someone that one cares for and or loves. How do you go about pronouncing it? Saudade.
Saudade. Okay, I feel like a lot of the Portuguese here know about this word. Saudade. Oh, I was saying saudade. A deep, bittersweet longing for someone, somewhere, or something that is absent or may never return. Okay, that's what we got. Amit, are you still doing A16Z stuff? Yes, I am. I am actively investing. I've already invested in 2 companies with the A16Z Scout Fund. If you're interested, Amit at akcoms.com. Send me your pitch if you are interested. I'm actually doing due diligence right now on a social media company. I will pitch it to you guys in like a week. I'm going to meet the founder on Friday. I'm really curious what you guys have to say. This is like literally zero or hero. It's $10 million valuation. I kind of think I like the kid. I think he's building the next Instagram. I don't know if it's going to be as big as Instagram, but his retention, his metrics already are like super crazy. So I want to pitch it to you guys, see if you think there's potential there. But yeah, email that email if you are curious or want to pitch anything. I have the capital to invest. So if you've got a good idea, that's the cool thing about having this as a community. I know access to capital is one of the hardest parts of the broader economic cycle, and thankfully I've got access to it. So if you have an idea, send a pitch and we'll see if we can talk. So that is the word of the day, a deep, bittersweet longing for someone, somewhere, or something that is absent or may never return. You know, it's ironic they're giving me this word today because I did call a friend on Friday. I swear I didn't talk to ChatGPT about it, but I called a friend on Friday that I have not talked to in like 4 years. And we spent like an hour on the phone together. And I also met up with a friend in New York Saturday morning that I haven't talked to in like 3 years. So it's kind of freaky because I didn't have any conversations with ChatGPT about like, friends or relationships or people that you haven't talked to in a long time. But then it pops out this word. I'm like, I don't think I could have sent it anything. Like maybe I asked it for directions to the place in New York, but that is so weird. It's like better than Meta at finding out what you're doing in life and figuring it out. So yeah, maybe it was listening to the phone. I don't know. That is weird. Usually we get a market word. Today we didn't. Saudade, Portuguese word. That's what we got. All right. Thank you, everybody. Appreciate you all. I'll be back On the market close, in that time, I will try to learn about the difference between Dragon Ball Z and Naruto so that we don't make that mistake again. And we keep going from there. So, all right. Thank you, everybody. I'll be back on the close, and we'll keep going from there. What's his name? You know what? You guys are funny. I really would recommend, though, like, honestly, the older I get, like, rekindling some friendships, especially if they were really good friends, but you just fell out of touch. You know, it felt good to reach out to that person again and just, you know, catch up. So I think it's a good practice in life to do. I just don't know how the hell ChatGPT knew that I was doing that. Anyway, thank you, everybody. I'll see you guys on the market close. Bye, everybody.